Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90% and three different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, everybody. Good morning, good afternoon, wherever you are in the world. Thank you for being here. We're back for another inflation read here this morning. We have the producer price index coming in hot. So what are we looking at today? Could this move markets? And if so, how much? Well, yesterday you had really good news on the inflation report. You had a soft or a cool CPI report, which was definitely welcomed by this market, which has been, clearly in a bit of a free fall. That being said, you can see the state of the market that we're in, which is, even though the CPI report was, I would say, a really great print, it wasn't quite enough to get the stock market specifically off of its lows. However, it did help gold. Gold's looking great. Sorry for the echo, guys. That's my bad. Hopefully there's no more echo. Should be fine. Anyways, gold's looking good here. You've got stocks slightly red today, but you can actually see that for stocks specifically. You have this big push up yesterday on CPI, fell apart yesterday after the event, right? And then now we're kind of back towards the lows. So I think if you're looking at price action specifically for stocks right now, you have to give it to the bears still. I mean, this doesn't look like a healthy bullish chart at all. That being said, I've been saying this regularly and consistently. I am not a bear on this market. I am not betting that this thing is going to drop. Man, I was in just a spiral on social media last night, watching how everybody just turned into a bear all of a sudden. It's kind of amazing. It's such a psychology thing. This put to call ratio thing that we talk about on the show so often is so real. When the put call ratio gets really high, I've explained this 7,000 times, but here's the 7,001th for new people to the streams. Put to call ratio shows you the weight of options on the put side versus the call side. And even if you don't trade options, it's a very useful tool because what this is showing you, when this goes very high, it shows you that people are out there really aggressively paying up for puts. People are buying puts, which are bearish bets to protect their portfolios, to bet bearish on the market. Many reasons that people could buy puts, but the point is people are buying them. And I go over social media and it's like everywhere, man. Everyone's like, oh, you don't want to buy stocks now because they're going to crater 50%. And that's like just a absolute, wave of bearishness. People are like, I thought to myself this morning, I was like, there are a lot of closet bears out there. A lot of people who are just, they hate the stock market. They think it's going to 50% down and that this is the beginning. And look, you may be right, but even if you are right, you know how you mess it up? You get super bearish when everybody else already is, right? It's the same way on the way up. Everybody got bullish after everybody had already gotten bullish, right? So the thing is, when it comes to stocks, indices, right? When they're trending higher, they can trend for a very long time, but chasing when everybody is euphoric is a really dangerous recipe. And in my view, the risk to reward on stocks has gotten better in recent weeks, not worse. Whereas everywhere you go on social media, people would swear to you that the risk to reward has gotten worse for stocks, that you should be selling them, that you should get bearish, you should short everything. And look, I'm not saying that I'm not bullish from the top. If you've been watching my channel, you go back a few weeks, I was very cautious all the way until about right here where I started buying shares of stocks that I like. So I missed this initial pretty aggressive drop on the NASDAQ. But here's the thing. For me, it's like, okay, a 14% discount on stocks that I think, I think that people are overly panicking because there's been some tariff drama. Like, is that going to crash the entire economy and crash the entire world? You might think so. I personally don't. Could there be some negatives in the economy? Sure, there could, right? But we're operating, this market is selling so aggressively off what might maybe possibly happen instead of what is happening, right? Company earnings in the US, they have slightly lowered their guidance for this year, which you kind of have to. Company guidance is when a company produces its forecasted revenue and profits for the forward year. They've slightly been pulled down here. So why I say the risk to reward looks more attractive to me is because now everybody thinks the market's going to crash. Everybody lowers their expectations on stocks. And I don't think that things have drastically changed underlying in the fundamentals. When we look at the US economy, and that is something we do every single day, we take a look at the US economy. Is it all devastated? No. There's some good mixed numbers in here. JOLTS job openings were healthy. Jobless claims, pretty good. Not freaking out on the jobless claims coming out. Wage growth is still at the 4% level. Unemployment rate is at 4.1. That's pretty good. NFP last week was not excellent, but it also wasn't terrible like people were fearful of. ADP was not great. So there is some weakness out there. But my point is the risk to reward, in my opinion, favors the bulls right now, because the bears are fully convinced that all this data is going to turn sour. And many, many times in my career as a trader, has the market said all this is going to turn blue or all this is going to turn red, and they're just dead wrong. The market is not that good at making a perfect prediction of what's going to happen next in the economy. You know, there's an expression in the economics world. Economists, let me see, let me try not to butcher this. The future, okay, so the expression is speculation or future events are very hard to predict. I'm messing this up. I got to find it. I don't want to say it until I know what the correct phrase is. But basically the idea is it's really hard to make a call on what's going to happen in the world. And when everybody's convinced that they know what's going to happen in the world, a lot of times the opposite happens. That's the point. So everybody is convinced right now, we're going to go into a recession and tariffs are going to ruin the world. And again, this is not a, oh, I'm just a massive Trump supporter and I think that, you know, he's going to save the day. That's not what I'm saying either. People did this under Biden too. People, you know, claimed that inflation's going to go to 50% or something insane. There was so many like, you know, kind of super perma bears that came out of the woodwork under Biden. They're doing it now with Trump. It's not a politics thing. People just get super scared. And in my experience in the markets, most of the time when everybody loads the boat one side and they're fully convinced something will happen, the market has an exceptional skill at taking the most money from the most number of people. A lot of people are selling their stocks and they're saying, I can buy them back later at 50% off. They might be right. But 90% of the time, from my experience, 90%, people who do that, they're wrong. And they do it at the worst possible times. They sell their shares and they say, well, I'll pick them back up when they go here. But then it does this, right? It may not do a V-shaped recovery, and I don't know that for certain. I'm just trying to make the point that a lot of people are going to make silly, dumb mistakes because they're trading with their politics and their emotions and their biases rather than trading with the data. And the data right now, for me, doesn't say a screaming recession is happening in front of our very eyes. Could it happen? Sure, it could happen. And we'll adjust as the data comes in. But to try and say for certain, oh, we're going into a recession right now, because we have some uncertainty about what tariff plans will look like, that to me is a silly rookie mistake that I'm not going to make. And maybe I'm wrong for doing that, but I think most of the time, through my experience, most of the time, the wrong thing to do right now is to chase the crowd's mentality that, oh, a recession is imminent, Trump's going to ruin the world, and let's sell everything, right? Again, it's not about Trump. It's just about when everybody thinks one thing. That's what I'm trying to say. Sentiment is a very important thing in markets. And I'm just not going to chase sentiment, which is to get super bearish, as everyone already is doing so, right? Everyone is getting bearish. That is, we can also see it in the AAII Investor Sentiment Survey, which came in yet again, peak bearishness. So again, what I'm phrasing here is that I did not chase the NASDAQ and the S&P 500 off a cliff. I've been very cautious and on the sidelines for most of 2025, except for the beginning. The beginning of 2025, pre-inauguration, there was some hype trades, some momentum that was excellent. I was long Bitcoin. I was long NASDAQ, SMH. I had some great trades there. Trailed out. Markets have kind of come down hard. And now that sentiment is starting to peak up in bearishness, I am starting to get more bullish against the crowd sentiment, but also because the economic data to me does not suggest recession is imminent. So that's my opinion on it. I know I keep saying it, but I have to, I'm just shocked by the number of people who are becoming just outright, oh, I'm going to sell my shares, sell everything. It's going to 50%. I saw people saying the S&P 500 is going to 4,000. 4,000? Could it happen? Sure. But you're going to try and tell me, you're going to try and predict a 35% crash in the stock market. You might be right. But like I said, 90% of the time, you're wrong and you're going to lose money trying to think that way. Trying to call some incredible black swan sell-off is the bane of existence for so many of the perma bears who have lost tremendous amounts of money fighting the upward trend of the US stock market. Again, doesn't mean it can't crash, doesn't mean it can't sell off, can't have ugly months. But if you're going to make a giant prediction like that, again, there's a graveyard of bears all around you. That's what I'm saying. So look, I was cautious. I was even slightly bearish up here, but I'm not going to get bearish after a huge move like that, right? In fact, there's stocks out there that I think are starting to look really attractive. Anyways, gold is working for me. I'm still long gold. I've got an entry on this one from about a week ago, and yesterday we finally saw a little bit of a try through these 4-hour resistance levels. So you can see we topped out here, consolidated, and now we've got a little bit of a breakout. This looks good, but with PPI coming in about 30 seconds, guys, and unemployment claims, we're going to react to see how this does. This could move pretty much everything. Again, the producer price index, another very key inflation data point. Let's watch in just about 20 seconds what the data comes in, and I will make sure to break it down as best as I can for you guys. If you could do me a big favor, hit the thumbs up button as we watch this news event. Got about 10 seconds to go here. Let's see what we get. All right, and the PPI number looks like it has just come out here. Dollar index slightly lower on the print. By the way, we also get unemployment claims right now too, so we'll take a look at both data points. Gold at least holding its gains for now. No big movements either direction at this time. Maybe a little bit of mixed. PPI came in very soft. Month over month. Wow, okay. So unemployment claims came in a little better than expected, just 220K compared to 226K forecasted. And PPI and core PPI came in cool. Very nice. Cooling inflation data confirmed this week through both the CPI and the PPI. This is the producer or wholesale prices. Yesterday we had the consumer prices. Both showed signs of cooling in inflation. Very nice. That to me continues to support my bias on things like gold and things like stocks. A weaker dollar continues to be my general outlook on this market. A weaker dollar and an economy for the US that is not in shambles like the headlines would have you believe, but may just be normalizing. We may just be seeing, we've been having these years of just exceptional US growth. Maybe we're just seeing some normalization. Let's take a look at GDP numbers just for a second, just to add some context to what I just pointed out. So you can see that US economic growth has been monstrous, above 3%. That's really good. Now, why do I say it's really good? Well, 4% would be obviously better, but 3%, why is that so good? Well, think about it on a relative basis. Other places like Europe, the UK, they're sitting in like 0.1, 0.4% GDP growth. They're not having growth pretty much. The US has got very strong growth. So there's this big exodus right now. Oh, I'm going to chase, the DAX. I'm going to chase. And it's not that I think those trades can't work. I think they've been severely weighted towards the US for a long time. There's probably some room for other stock markets to really maybe even take the lead this year. They have done so far. Chinese stocks, German stocks, European stocks are up way more than the US this year. US is down. So, when I look at this stuff, my point though is that there's this big bear party going on the US economy. Everybody's convinced it's going to go off a bridge. How many times, man, have I heard that in the last few years? The economy is going to go into a recession. Look, will it happen eventually? Yes. My dad's expression that he says sometimes is even a blind squirrel eventually finds a nut. And think about it. It's a funny image if you think about it. He's like running around. My point is, if people keep repeating, oh, we're going to go into a recession, oh, we're going to go into a recession, eventually you're going to be right. But how much of the market gains are you going to miss out on before you are right? Maybe the comical thing about, or not comical, but the difficult thing about being bearish, right, is that let's say this is the stock market and you are saying for so long, it's going to crash. 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 And it doesn't. And then you say it's going to crash and it does. And you say, haha, I was right. And then it does this. Were you really right? If you were bearish this whole time and it never even crashed below where you initially thought it would, were you right? No. This is my point. Now, I'm not saying you should chase stocks either. I'm not a believer in chasing, indices higher, or even in this case, chasing gold when it's already towards those all-time highs. I think we want to be more constructive than that. We want to wait for pullbacks. We want to wait for opportunities. But again, this week we had good inflation data. I think that at the end of the day, there's a lot of tariff uncertainty, and I would not be surprised with a chart that looks like this if you do get a flush on the S&P 500, on the NASDAQ. Would not be surprised if another headline comes out and freaks everybody out. I think that if you're taking a look at the VIX, right, this is part of the reason I'm still holding gold, right? So I'm not short stocks, but I am long gold. And being long gold is kind of a defensive posture in markets, right? If you're long gold, you're betting that, well, you're not necessarily betting, but you're saying that, okay, I want to have some exposure to a defensive risk off kind of asset in case there's some kind of geopolitical conflict or there's some kind of fallout between the US and Canada and they can't agree on anything or something like that, right? So I am still long gold because I think uncertainty is very high, but the VIX has been exploding higher. I would not be surprised. Usually when you see a VIX have a real move higher, right, you usually get a blow off top moment. And so when we look at the VIX, right, look at this. You have these VIX goes up, and then it jumps really high and plummets, right? VIX up, and then it accelerates at the end and plummets. Jump, accelerates at the end and then plummets. Now, what is the VIX? The VIX is the volatility index. It shows you the expected, according to the options market, which is very smart, by the way, the expected moves in the S&P 500, right? So boom to the upside, accelerates, and then falls. I found out a cool calculation you can do to get an average expected daily move for the S&P 500 based on the VIX. You ready for it? At the highs, the VIX was trading at, let's say, 29. Let's just say 29 for round numbers. Let me show you this. This is what this is telling you. So if you take this number, 29, let's punch in 29, and we divide that number by 16 trading days in the month, it is telling you that the average expected daily move is about 1.8%. So that's what the bond market is telling you. Right now we're down to 24. So let's just do 24 divided by 16 again. 1.5% moves in either direction per day, right? That's what that's telling you. That's what the options market makers are pricing their options at. They're expecting a 1.5% move per day. So the thing is, anything less than that, market makers just make bank, right? Option sellers, which I love option selling in general. I have been, as I've been talking about, I won't go into options very much here today because it's not a very popular topic on my channel, but I've been selling a lot of options in this recent volatility spike because options premium are so high, right? People want to buy options. I'll sell them, but the market rate for options is very expensive right now. So I'm selling at high premiums, which I love being able to do. But had to be aware that a lot of times the VIX accelerates, it crescendos into the end. So we may see that one last spike, maybe up into the 30s on the VIX, at which point I will continue to load up on sell puts, sell calls on things that I like. And yeah, that's what I'm looking for, right? So again, could we see one more flush out event on the S&P 500? Sure, maybe we could. But we had PPI and CPI come in better than expected here this week. We saw inflation cooling. Unemployment claims came in nice for the last 2 weeks. I don't see massive incumbent recession. I'm telling you this now because a lot of people are going to start saying that. If you get a bounce back in stocks, that's what they're going to start saying. They're going to start saying, oh, no, well, there's not, we traded off of fear lower. And that's what CNBC will say then. But right now, they're all bears, right? Everybody is super convinced, we're going into a recession. No, super high uncertainty. It's all going to die. It's all going to end. And to me, that's an opportunity that I'm going to take advantage of. Maybe I'm right. Maybe I'm wrong. And if I'm wrong, I'm not going to blow my account. I'm still trading with, small trade size, and I have cash on the sidelines waiting. But part of the reason I have a little bit of a defensive posture in gold too is because that VIX spike could also coincide with a breakout higher. We're very close to all-time trading highs for gold. I'm going to continue to watch that. And we still have, to my knowledge, yes, we do. We still have a bullish reading on gold on the Edge Finder. A +8 score is pretty solid. We'll take that. We could take a look at the kind of more in-depth mechanisms here. Seasonality continues to look good for gold. And I did this point yesterday about gold. If you're somebody who watches gold, check this out with me. Seasonality is one of my favorite forces in markets. It's a fascinating, repeatable, kind of approachable edge that I think many traders don't even think about. Can I ask you guys to give me some feedback here really quick in the chat? Have you ever seriously considered, well, actually, no, let me ask you this. Have you incorporated seasonality into your trading approach? Type yes or no. I'm just curious if you have or if you have not. If you have not, please say no. I genuinely want to know if this is something that you guys want me to go into more in the next 2 minutes or not. Seasonality is so powerful, man. And if you're not using it, I'd love to explain it to you. Seasonality is incredible. Okay, wow, there's a lot of no's. You guys aren't using seasonality? Okay, let's go. This is going to be fun. So for the no's in the audience, let me tell you what seasonality is. First of all, it's the simplest, most powerful thing in the world. You guys know how every January everybody wants to get back in the gym and they want to eat better, be better to themselves because they just came back from the holidays where they ate 16 Snickers bars per day and 17 cakes per week. And you see what I'm saying? Like every January, people go to the gym because they want to get back in shape. They want to correct what they just did to themselves, right? Guilty. Okay, so that's seasonality. That's a real world force. Everybody wants to get back in the gym in January because they did something in December, like they just sat around too much or they didn't get enough exercise, they ate a lot of food. Okay, that is a repeatable every year phenomenon that we see over and over and over. New Year's resolutions, going back to the gym. It is observable in markets to a sharp degree. Gold has certain months out of the year that it tends to, not every year, not perfectly, but it tends to do better in certain parts of the year. If you're not trading with this, this is the easiest thing you could incorporate into your trading right now, today. If you have the Edge Finder, we've built tools for this because it's a powerful force in markets. It's real, right? It's a real force. Many of us are probably like, oh yeah, I've done that in January. I've got to correct things. I got to be better. Everybody makes a New Year's resolution. We're human beings. We do things over and over, right? Seasonality in markets exists too. There are certain months where certain things do better and there are certain things do worse. I got another example for you. The S&P 500 has poor performance, historically speaking, in a couple select months. You notice anything about where we are right now? We're in a month that is historically not great for stocks. February and March. February is okay, but March is, you can see in the last 10 years, has been historically an underperforming month. The reason I show you that is because if we know that there is some trend here, there's some things that repeat, and this happens for everything. We've built the data for you to select any chart that you want. S&P, silver, NASDAQ, gold, pound, euro, whatever, dollar, whatever you want to look at. You can look at the seasonality for that asset and see month to month how it typically performs. This is one of the easiest things that you could implement into your trading today. And it's a simple concept. Now, just because something moves historically good on a certain month does not guarantee that it's going to move the same way this year. Like July is historically a pretty good month for the S&P 500 in the last 10 years. Does that guarantee that it's going to be up in July of this year? No, it does not. Does it give you a slight bias? Yes, it does. That's how I use it. Okay. It's an easy thing to incorporate. With edges, we're not looking for 90% accuracy because that doesn't really exist in markets. If we can get 55, we get 60% correct on direction, we're going to make some money. That's the idea, right? If you can get to a point where your trading results are 60% on a one-to-one risk reward kind of concept, right? You're going to make more than you lose. And that is profitable trading 101. So seasonality for gold, seasonality for the S&P 500, for the Australian dollar, for euro, for pound, for yen pairs, whatever you trade, I would encourage you to take some time and find a way to implement seasonality into your trading. I've made some good money on gold this year so far, being long because seasonality tilted the score. Now, the Edge Finder, the brilliance of the tool that we've worked on, our team here at A1, is that we look at seasonality, but we also look at retail positioning. We look at the commitment of traders report. We look at trend. We look at manufacturing PMIs, services PMIs, retail sales data, employment data, inflation data, CPI, PPI. We look at this stuff in our algorithm to help us determine the best possible bias that we can. It's never a guarantee. Nothing ever is in markets, but give us the best shot of being on the right side of the market. That is ultimately the goal of the Edge Finder, right? That is the top setups algorithm in a nutshell. We looked at seasonality. We zoomed in on seasonality But if you're somebody who watches every day and you're like, oh, I've seen these tabs, but I don't fully know, every single one of these has in-depth research that our team has done to incorporate into the Edge Finder. The algorithm that is scoring these things is not random. It's very specifically calculated and scored for every single asset. That's how this thing works. If you don't have a copy of the Edge Finder, you want a copy, check it out in the link in the description that we're or the chat that we're about to drop. You can send a direct message to our support team if you want some information about getting access to the Edge Finder. This week, memberships and Edge Finder are currently 35% off to those who are watching the live stream right now. If you send us a direct message, we'll lock that price in for you on the Edge Finder. Again, yes, it is a sales pitch. I'm not going to shy away from that. This is a great tool that we have put countless hours and huge investment into building. If you are somebody interested in getting the same tools that I use and thousands of traders around the world use, check out the Edge Finder. If you use the link in the chat right now, you can speak directly to our support team who will get you an extra discount on the tool today, 35% off. Okay, up next, we got Miko and Marco joining for Technical Thursdays. We do this every Thursday. We talk technical charts, setups that are happening in markets now. So we'll be right back with those guys in just a second, right after this quick break. We often get asked by our US, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show. All right, we're back with the tribe, the trio. We're back for another one. Good to have you guys on the show.
What's up?
Hello.
Guys, the markets are just never-ending sources of volatility here recently. I was talking earlier just about the VIX being up very high. This is causing all markets, currencies, commodities, indices to move more than usual. And I want to start with the dollar today. I'm curious what you guys' thoughts are on this. After the big sell-off in the dollar, is there a big kind of up move headed our way for the dollar index, or is this just kind of a dead cat bounce before continued sell pressure? Marco, what are your thoughts on the dollar right now?
Yeah, sure. So let me take a look at the index. In my personal opinion, yes, there is a bit of a bounce. So it's better to look at the daily chart actually. A bit of a bounce, but if I'm just looking at the technicals, this is heavily melting down with a lot of selling pressure. So 3 very large bearish candles, a bit of a relief right now. But if you compare this momentum to these 3 candles, I would say the sellers are still very much in control of the dollar index. So I would be bearish on the DXY. So yeah, that is my opinion. In terms of the dollar pairs, I would actually say that EU and GU are looking very good for buy setups. They are fundamentally very strong as well. So I would definitely consider some buy setups. We could possibly get a bit of a pullback right here. Something like this, a bit of a pullback, and then some momentum up, which I would look to then go long, because right now it is slowing down on the top. It is very correctively moving right here. But yeah, I think EU and GU look really good. AU looks a bit flat. So AU does not look as good. Those are my 3 main dollar pairs, and I'm focusing on these 2. So AU is currently not on my list. The reason is AU, so the Aussie is fundamentally weak. The dollar is fundamentally weak. That's not a good combination. So I'm looking for combinations where one of the currencies is weak and one of them is strong. So EU or the euro is strong, dollar is weak. GU or pound is strong, dollar is weak. And also I spoke to my grandma yesterday.
Oh, yeah?
I told her I'm gonna probably buy some S&P 500, and she was like, "Oh no, don't do it. It's going to the bottom. It's crashing. Don't do it. You're crazy." So I bought some more. So
your grandma is she's doing us all a true service by just giving us kind of the headline feel I mean,
Yep.
it's very common that she's just a human being, right? We all kind of feel the effects of the headlines. Oh my gosh, this the market is crashing, Bitcoin's going to zero, and no, it's a good contrarian indicator, and it's like I said, it's not just her. There's many people who I was saying this earlier on my stream. Man, I was scrolling through Instagram, and it's just like everybody turned into this doomsday bear overnight about everything, and it's like, where there is absolute fear, I think there's an opportunity personally to step up and be brave, buy the dip on some stuff that looks good. And we'll see. But maybe we'll get into indices and cryptos and stuff in just a bit. Miko, what are your thoughts on the dollar? I mean, I want to ask too, I'm just going to guess. Do you like euro and pound as well? I think all three of us, that's my guess, is we're all going to like those pairs today.
Yeah, I'm pretty bearish on the dollar, so
Okay.
I'm looking to short the dollar, but I first need a bit of a pullback, which hopefully we might be seeing over the next few days here. But yeah, really bearish move last week. My plan is just basically looking for the pullback of that for more downside. There's a few areas on the daily chart which I'm looking at to see if we can retrace into. There's also a level here around 104.5. So I'm looking around these areas for some shorts on the dollar, but if we take a look at Euro USD, pretty much looking at the opposite, to be honest. So I like the low here, potentially around 107.7. And I like this area here as well. So it just depends how much of a pullback we get, because we were so bullish last week. Sometimes we only get some shallow pullbacks before price continues. Maybe we get a bigger one, but those are the two areas I'm kind of looking at. But yeah, very bullish on euro, bullish on pound USD. Looking to buy the pullbacks on these markets. I like this range here for pound USD as well. And if price can pull back into that, that'll be absolutely great. But yeah, very bullish on both euro and pound.
Yeah, I mean, that's the thing, is what we're seeing here is just a dollar sell-off, and finally kind of seeing a little bit of a bounce on the dollar index. But I'm kind of with you guys on this. I think that if you get a little bit of dollar bounce, it would be something that I'm a little bit more interested in selling into than not. I mean, the dollar index has definitely reached some oversold status. Doesn't mean that it can't get more oversold, but I think that you've started entering into kind of an oversold level. I'm definitely not long-term bullish at this time, but if you do get a bounce into some key areas, I think that might set you up for some really nice trend continuations on pound and euro against the US dollar, like you just discussed. Euro pulling back here a little bit. Pound looks really interesting to me, especially if you get a pullback into this 1.2770, let's call it, area. And I think that would be probably a 50% pullback from this recent kind of low to high. Yeah, that's about a 50% pullback. So I like the opportunity there if we do get some short-term dollar strength coming into the picture. But very, very curious to see where we go with that. Beyond just euro and pound against the dollar and just dollar crosses in general. Marco, what else do you watch? Do you have a chart of the day that's not the US dollar pair?
So I am watching gold actually.
Okay.
So I'm in a more of a fundamental longer term buy setup, and it's running some profits. So I'm using a trailing stop loss. Still haven't trailed it though. Still waiting for the price to develop. It's kind of better to look at this on the 4-hour. So yeah, gold just looks bullish in my opinion. The technicals are there. The bullish momentum is starting to kick back in. What is even more important, fundamentals are very bullish on the edge finder, which is a major confluence. So this would be my chart of the day. What I also like is the overall environment is pretty much in panic mode, risk off, and everyone is still pretty afraid of what is going to happen with the tariffs.
Yep.
And we have some inflation numbers as well that have come out. We have the Fed meeting next week, so that could be a big catalyst for some movement on the dollar and gold. So yeah, this would be my pick for the best chart. In terms of other charts, well, I do like actually some JPY pairs. I do like potential sell setups on the JPY pairs. It would probably be not the Swiss yen. I got stopped out on that one. So I'm looking at New Zealand JPY and Aussie JPY even more. So yeah, I would look for some further weakness right here. We do have a nice pattern of an ascending channel and this signature of momentum right there. So I would look for some sell setups if we can continue just a bit more with some more selling pressure. The conclusion is basically that I'm looking at EU, GU, gold, and AJ for now. So looking at EU to buy, GU to buy, AJ to sell, and gold just monitoring and seeing how that will develop. But the best chart would be gold.
Very nice. Well, you know, on a note of that, we've been, or on a resumption of one of our conversations that we've kind of had every week on a relative strength basis. I think it's interesting to watch the metals, gold and silver comparisons, but also dollar and gold comparisons. I think are really interesting. Gold has kind of gone into a range. From a price action standpoint, I actually would have hoped that this drop off in the dollar would have given us that kind of move. That being said, you can actually see that the dollar index rolling over or kind of bottoming out in the short run seems to have no effect on gold. So that's kind of telling me that there's still quite a bit of geopolitical uncertainty and stuff that's just propping up the price of gold. It doesn't seem like you know, when the dollar index was on the up and up, right, trending up, we actually saw gold during that same period holding up just fine. I mean, this was, let's say, October into end of year, and October into end of year, gold went sideways, then actually ended up. So, or I guess started to go up after that. So held up very well. We talked about that a lot during that time, that relative strength, that holding up well against the dollar. These things are not one-to-one. Gold or the dollar down does not necessarily perfectly mean gold up, and dollar up does not necessarily always have to mean gold down. They're not a perfect inversely correlated pair, but definitely worth just keeping an eye on that relative strength. And I love that conversation that we have on the show each week. So speaking of relative strength with silver, Mika, are you watching silver? And also either ways, I'd also love to get your chart of the day. What are you thinking?
Yeah, so I'm keeping a close eye on silver. It's been a bit of a sideways move for silver for a while, but it looks like we're seeing some momentum and we finally broken through a big level, which I've been waiting for price to break through. And finally, it looks like we've kind of got the green light on that. So as long as we stay above 32.3, I'm looking for a push back into the previous swing high here on the daily chart, which is back at roughly 34.8. So I'm pretty bullish on silver now, and pretty much just looking for pullbacks and entries on the 4-hour chart. Something like this would definitely interest me now that we're back above that level. And as long as we stay above, I would remain bullish. So I like silver a lot more than gold. Again, I'm bullish on both of them, expecting higher prices, but of course, with the way I trade, since gold is right at the high, there's not a lot of room for me to work with just yet. Although I do think gold is likely to break out, but silver looks like it's got a bit more room, so I'm liking silver. And in terms of a chart, which I'm focusing on a lot as well, Euro Yen, I'm looking for some shorts on Euro Yen. I did miss an entry on the 4-hour chart yesterday, so I'm looking to see if I can enter on the daily chart. If this bearish candle closes well by the end of the day, I'll look to take some entries on that candlestick. I'm pretty much just looking for the next lower high in the sequence. We had one over there, second over here, and I'm anticipating a third. We've had a really strong level of support down here, and I'm expecting price to make its way back into that level. Long term, I do think yen pairs might be looking to create a bit of a bearish trend, so I'm trying to anticipate that and catch some shorts on euro yens in a pretty convenient area. So yeah, we'll wait to see how the daily candle closes, and things look good. Hopefully get some entries by the end of the day.
Yeah, and Mika, while you have the screen, talk to me about indices. They've been just a point that I've been talking so much about indices on my channel. I'm trying to stay focused on other things as hard as I can, but stock selling off always just takes all my attention. But I'm curious, from somebody who focuses on other things more than indices, I'm curious what your thoughts are on this recent kind of just one directional plummet that we've had in stocks. I mean, you got to look at that and just say, wow, that's erased. Go back to what, July of 2024. We're actually below that. I mean, we're at early July levels on the S&P 500, erased in, by the way, just about 20 days, right? So 20 days wiped out. And that is the core to how indices trade right there in front of our eyes. They go slowly up and dramatically down. And then now everybody scrambles to say, is that trajectory going to continue down lower, or is that kind of the start of the next kind of trending back up? That's the game of indices. It's like musical chairs, right? So I'm curious what your thoughts are.
Yeah, so after that move there, I'm pretty bearish on S&P. Of course, looking for a bit of a pullback at some stage, but since we have cleared some major support here, that has definitely made me bearish for S&P and some of the other indices. It could potentially just be another bottom because I'm looking at these very exaggerated bearish moves, kind of similar to this one as well. And price has found a way just to keep pushing. So if we were to break back above, especially if we were to push quite strongly to the upside. So if price was a bit slow on the way up, then I would be expecting another drop. If we were to recover very quickly, especially above that level, then that would give me the impression that, okay, that could be another higher low, and we potentially revisit the highs afterwards. I've also been looking at the 200 moving average as well. And looks like price has cleared that too, which again, sometimes we do clear and then we get back above. So that could be a raise potentially. But it's a pretty strong breakout. And if we take our time on a pullback, especially if the 200 starts to round a little bit, it might look as if price is respecting that for potentially a sell. So I think that's a good indication to keep an eye on as well, because for a while we've been comfortably above the 200 since the dip in October 2023. Now we've finally broken below. If we stay below that as well, respect resistance, I think that's a pretty strong bearish signal. Of course, if we were to break above, then I'll rethink things.
I was going to say I love the 200-day moving average analysis that you just did there. I was going to pull up on my screen for just a second this concept of the 200-day moving average that I've been watching. I've just changed over to QQQ, which is the NASDAQ ETF. Reason is I just want to remove my support and resistance levels for a second for this part. Basically, as you pointed out, Miko, we've lost the 200-day. We've lost just key support after key support. This market, from a price action standpoint, has lost a lot of steam. But for bulls like myself, I kind of always looking for an opportunity in indices, although I had been very cautious and out of the way. And the initial sell-off, I'm starting to pick up shares for the long term, but from a trading perspective, right? I'm not short-term trading it long. I have like just like we talked about with cryptos, like when they plummet off of the face of the earth, it's like, if you're a long-term believer, that's when you probably want to pick some stuff up. I've been doing a little bit of shopping on individual stocks I like, but from a trading perspective, the NASDAQ, the S&P 500, they've lost that 200-day moving average, exactly as you pointed out. I would be looking at for a possible bullish, more short-term signal that we might head back towards those highs would be a recapture, break above, and continuation. So as you've pointed out, I think that at first glance, that level, yeah, you've got to be cautious and probably bearish. But if you are a bull, maybe a constructive way to wait for a bottoming signal for me right now would be, let's recapture the 200-day. And let's see if we can find support at it. That would be what I'm looking for on a technical basis. Marco, same question to you. Indices, whether it be NASDAQ, Dow Jones, S&P, whatever you're watching, what's your take on this? And if it does go lower, how much lower do you think it could go?
Yeah, so, there are kind of two perspectives. If you're a trader, this chart would look horrible for buy setups, in my personal opinion. So this is just major sell-off pressure, major selling momentum on the daily chart. And if you're a trader, I don't think this is the best play to go long. But if you're an investor, for me, the most important thing with these extremely popular assets such as Bitcoin and the S&P 500 is going to be the sentiment. So, and now everyone is, of course, in panic mode. I've seen a lot of posts on Twitter saying that they're basically shorting Tesla because they don't like latest stunts that Elon Musk is pulling, which is like, that's a stupid reason why we should sell a
totally
stock.
Stupid and incredibly triggering to me, because I'm like, you guys are idiots. Like, I'm sorry, that it doesn't matter what you think about Elon Musk or dislike, keep that at the door for a second. If you're just shorting a stock because you don't like the guy who runs it, that is just that is crazy. He's, anyways, that's a highly emotional topic for many traders, obviously myself included.
Yeah, it's very funny actually. So I get a few laughs, and they fill up my buy positions, so someone has to pay for that as well. But yeah, when there are posts online saying that they are shorting Tesla or the stock market because they don't like the politics, they don't like Trump, I think that's a pretty good time to actually get in as a more longer term investment. So those are kind of the two perspectives. Technically, this looks very bad, I would say. This looks very bearish. Again, we have broken the 200 moving average and closed below it on the daily, as we saw. But the sentiment is getting very bullish, in my opinion. So if you want to be a contrarian, and usually it works. So yeah, that's kind of my perspective.
You know, I've been ranting about this a lot on the channel here recently. It is not a adamant support from me for Trump or for Elon, but rather just an absolute frustration with people who make their trading decisions like that, because we saw it under Biden too. This is not a Trump unique scenario. A couple years ago, everybody was like, Biden inflation is going to crash the whole world, and they were selling their stocks, shorting their stocks for the same reason. The last time Trump was in office, there was a huge, 2018 was a volatile year where people were doing the same thing. That mistake hopefully has taught some people that you should not make your investment decisions off of your personal political biases. Like, it's totally fine to have your opinions and biases, but if you take them with you into your trading, that's just going to be a rough catalyst, because you're going to blindfold yourself. You're going to say, oh, markets can only go up under my person, and if they go, my other person wins, then I'm going to be really pissed. And that just is a silly way to look at markets. The markets are bigger than even the president, right? The markets they go beyond just, the presidential actions. Sure, they can impact things, but I would say that the market overreacts to most things that are going on right now. And even if they do have some long-term effects, I think that the market is likely going to overestimate the impact that those things will have. More than likely, that is usually what happens in markets. Most of the time, people freak out more than what actually happens. It's a very observable phenomenon in the options market specifically, where very regularly options historically trade for higher than they actually become worth. Like, if you buy a call, right? Let's say you buy a put, the value, the amount of money that you spend buying a put in options world, historically, it's worth a little bit less than you actually paid for it, but you're paying that extra premium to take out the uncertainty of the market. That's what the options market does. Is, you pay extra premium to buy protection. It's just like insurance, right? We all know, like, most of the time, insurance on average, you pay more than you ever actually use in the collateral that you get paid out. It's the same thing for the options market. So anyways, really, really important stuff right now with the VIX high. I think there's a lot of fear, and I totally resonate with that, Marco. Just Twitter feeds, social media, everybody panicking and selling or even shorting stocks. And again, they're doing so after you've had a big tank in the market. People are getting loud now. They're not getting loud here, right? Everybody up here was bulls to the moon, right? And then now all of a sudden everybody's bearish. So crypto has also taken a big hit in recent weeks. Miko, what are your thoughts on crypto? I know we talk from a trading perspective and a bit of an investing kind of perspective when we talk about crypto. At what point, if at all, would you step in and buy some of the stuff that you like for the long term? Is there a level for you, or are you just not even interested?
To be honest, I'm not really interested in Bitcoin. I'm more interested in some of the smaller cryptocurrencies.
Okay.
But I do like Bitcoin to the upside. I like kind of gauging it from just a price standpoint as well, like percentage, how far we've fallen. Anything more than 50%, I think, is just generally a good time to get into a long. I think at the moment we've had, was that about 30% ish? So it's a pretty big correction in general, but Bitcoin can of course go a lot further. I like this area here. I think this could be an interesting level. Big consolidation, a lot of momentum. I think if Bitcoin starts to slow down, we start to see a lot of rejection. I think this is a nice time to be looking for potentially a long-term buy, at least another attempt back to the highs there. So generally speaking, still very bullish for Bitcoin as a whole. We've topped out there, yes, but I'm still expecting just more retracement for price to continue pushing. And 70K roughly is the area I'm expecting the next bullish move from. But I need to see how we get there, how we react before I make that final judgment. But yeah, that's kind of what I'm expecting for Bitcoin.
Yeah, fair enough. I've actually seen a lot of people drawing in that same kind of zone. So maybe that is where some patient, longer term bulls are waiting out. So we'll see if that continues to tank off of a cliff here. Maybe you're starting to get towards some, quote unquote value. It's hard to value something that's all digital, but maybe a little bit more attractive pricing for some in the high 50s to 70s range. So we'll see. Marco, same question to you. Crypto. Do you step in at a point and add some names to your crypto holdings, or no interest for you? What do you think?
Well, the chart looks pretty bad. That's the first thing. So for any trades, I wouldn't like to go long right here. I wouldn't like to go short either, to be honest. So the chart is bad. The sentiment, I haven't read much about it. So I think the S&P 500 is much more popular on social media right now. So I do think there is a big chance of another crypto winter, which usually lasts for like 3 years. So that could be in play. Yes, I do like these levels. So maybe we could get a bounce from here. But again, from what I know from the past price action of Bitcoin, these crypto winters really last for quite a few months, or maybe even a few years. So I would probably look to pick up some buys, some very long-term buys around these levels. I like Miko's analogy, but I don't think we will get an explosion soon. So that's kind of it.
And would you be looking specifically at Bitcoin, or would you look at something smaller than Bitcoin?
I would look at Bitcoin, possibly Ethereum, but I would focus on Bitcoin. So how I currently have it is, I think, 75% Bitcoin and 25% Ethereum. But if you look at the chart of Ethereum, it looks pretty horrible. So I think Bitcoin is a better buy. And I do see a use case for Bitcoin. I really believe in the technology. I have actually used it. I do think it's more, let's say, easier, more efficient than bank transfers. I did some bank transfers this week. It was such a pain in the butt, and it was quite expensive as well. You actually need to pay a fee, especially if you're sending money abroad, and then you need to wait for 1 or 2 business days for the money to arrive. While with crypto, it's almost like a couple of minutes, and you get a confirmation. You see how the process is going. So I think it's a much better, much more efficient process than with the banks. And just a side note, why do the banks take so long to do the transfers? Well, because a lot of people are working there, and if they made instantaneous transfers, a lot of people would lose their jobs. So they make up these extra checks in order to keep their jobs. So I get it, but it's kind of not cool.
Yeah, no, that's interesting. I mean, if you think about it, I've used Bitcoin in many ways just for different transactions, and like you said, it is so much more convenient than any other thing. So yeah, it's interesting. We'll see where it goes in the super long term. I feel like if you are, same thing I feel like with like Tesla stock. I have been a fan of Tesla for the long term for a long time, and it's almost like it has these moments in time where it is the most hated thing on the market. And Tesla is the most hated thing, I would say, right now. It's probably the #1 world's most hated stock.
Yeah.
Well, back in 2020, when this move happened, I remember, and I'll never forget this for the rest of my trading life, or just my life in general. At this moment, Tesla, rewind the clock, was sitting at about a 60% drawdown. And several major financial institutions, you can look this up, they came out and they put a price target on Tesla for $1. They basically called that the stock was going to go to zero, that it was going to go to bankruptcy. And what happened is the most awesome big middle finger to hedge funds I've ever seen in my life. I know everybody loves GameStop, but I love Tesla's story even more, because what happened is one of the most incredible stocks of the last decade in terms of return. We went up, we just went parabolic, and the stock just went absolutely to the moon. And right now, as a long-term believer in this stock, it has become more politically charged in recent times. I've liked the stock before Elon Musk was even in politics stage at all. So it has nothing to do with that, but it's more the things that they're building, the technologies. I like them. This is a controversial stock, but sometimes controversial stocks can just absolutely. The other thing I'll mention about Tesla stock at that time, the short percentage, it was the number one most shorted stock too. So it was like just absolutely satisfying when that thing just ripped to the moon. So I think it has a potential setup like that happening again, where everybody hates it. Everybody thinks it's the worst thing, but the company itself is growing and has some phenomenal technologies coming. So I don't know. That's there's people who obviously largely disagree with me, but that's why there's a market in the first place. Somebody wants to sell, I want to buy, and time will tell if I'm dead wrong about that stock or not. But just something to think about with markets. Guys, I want to just thank you both for coming on, sharing your thoughts as always with us. Miko and Marco both have their own social medias and YouTube channels. We're going to drop the link to those guys in the chat right now. If you guys could do me a big favor to the audience, take a second, go subscribe. It's Miko Audu on YouTube or Marco's Trading Journey also on YouTube. Check them out. Go subscribe. Show them some love. They're coming on here every week to help us to do what we do here, which is trying to make great free content for the trading community. So help us in our effort of supporting Miko and Marco in their own content creation journeys as well, sharing free value each and every day. Miko, Marco, thank you guys very much for coming on.
Thank you. See you.
All right. See you next week. Okay, guys. So anyways, up next, we've got our next show host coming on. It is Forex James. He comes on multiple times per week and shares some powerful insights with us here on the A1 Trading stream. We're going to take a quick break, and then we're going to throw it over to them. Just a quick reminder, our VIP membership sale, 30% off right now, is currently coming to a close. If you're interested in checking that out, if you want some more details, head over to a1trading.com/VIP. And you can find out information about our current memberships discount that we're running. If you want to see the trades that we're taking in real time, sent directly to your phone, might be worth checking out. That is your last call on that. And up next, we got Forex James taking over the stream. Be right back. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out, in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hello. How's everyone doing? Let me just move my camera back a bit. Still slightly off the screen, but that's okay. How's everyone doing? The week is almost over, so who's made money, who's not made money, and who got margin called? Kiwi dollar. It does sound quite nice. BGP. I'm good, thank you. How are you doing? Kaidas, hello. Basil, hello. Or Basil. Self-substination, hello. Hello, everyone. Yeah, I'm just going to try and sort my camera out. I think it's a little bit off screen. There we go. I think that's okay. Shells, hello. Good to see you. Maxi. Okay, right. Let's get into some markets. So I'm in Euro Pound at the moment. Went in for a small mean reversion trade. So nothing overly interesting, actually. Just, as I do with DCA, but this one was actually a lot slower on higher time frame, so it didn't really give too much. So I went short on this high off the Bollinger Band, and that's about it. So we had news today. Europe supplied tariffs to whiskey US whiskey. Trump said if it's not removed immediately, he's going to put 200% tariffs on all alcohol coming out of European countries. So, trade war tensions are still prevalent. Although it's only alcohol, I think the concern really is how far is that going to go? Is it going to cause even more problems on a wider scope of things? We'll see. So there's that. So that's why I'm also staying short euro pound. Dollar yen, also the one I called on stream yesterday and took live, hasn't actually done much. We had a little bit of profit here, but yeah, not anything really to shout about just yet. Closed my gold trade for a nice little profit here. So that one was, pretty good realized. I re-entered oil. So I had a stop loss here on oil. So I've taken it again because I still like oil short narrative. Swiss yen is not doing anything. Australian dollar, New Zealand is also not really doing much at the moment. And Australian dollar, US dollar is, in some slight drawdown, but I'm still happy to hold. It's coming into the support level. So we'll see how it reacts from there. Okay, let's see. Trump's destroying the economy. I mean, it's hard to say he's not, to be honest. With the way the stock market's looking, the way the dollar's looking, it's not great. Okay, sweet. So yeah, there's not much I'm really looking to take, to be quite honest with you. I've got a pretty wide watch list, or a pretty long watch list, but the problem is that none of it is ready to execute. So euro dollar, I was looking to go long, but on the back of this tariff news, I'm a little bit concerned. So I'm happy to just wait until entry, and then I might, reassess the situation. Is it still a trade I want to take? Same thing with pound dollar. Although pound dollar is not really at risk of tariffs at this point anyway, it could change. So again, just waiting for a pullback on this market so I can look to go long. Silver, exactly the same thing, just looking for the next 50% move down, and then I will look to go long again. Yen pairs across the board still look really, really attractive. Australian dollar yen, CAD yen. But I'm already in US dollar yen and Swiss yen, so I don't want to get overexposed in that market or on the yen. Dollar Swiss shorts, I don't mind the idea, although fundamentally I'm bearish on the US dollar and bearish on the Swiss. So not really too desperate to get into this one, especially with the dollar that looks primed for a pullback. So yesterday I was saying that we filled in the gap from the elections when Trump came into office, Trump was elected. And we already had a very, very large drop off on the dollar. So it would make a lot of sense to have some sort of pullback before potentially coming lower. So yeah, I'm just a little bit hesitant being too heavy on dollar shorts at this time. US 500 or the S&P, I'm not looking to get into any trades just yet. I'd like to see a full sort of reversion back to the 200 moving average and previous structure on the weekly time frame. It might sound very pessimistic or optimistic depending how you look at it, but historically this approach works. So if you look here, deviated, pulls back. Obviously this was COVID. Even here, deviated, pulls back, deviated, pulls back, deviated. Now is this the pullback coming? It very well could be. So yeah, I'm not looking to try and counter trade a falling S&P because I think that would be a little bit of an aggressive and silly thing to do just at this moment. DAX, I've got no opinion on at this time because it's just flat. The news about, what was it called? The German fiscal spending of 900 billion euros was a really great supportive factor, but that had backlash from the Green Party. We've now got potential tariff problems on alcohol, which again could lead into other areas. So yeah, I'm going to stay out of the DAX for now. So the only real thing I'm considering taking is Euro Swiss. And again, a little bit hesitant on the euro at this time, but I think the overall idea is still great. The euro has been outperforming essentially all of the G10 currencies. It's kind of been on par with the UK pound or the sterling. The Swiss, again, I'm very bearish on the Swiss due to the likelihood of neutral to negative rates this year. And a weakening Swiss economy. So I like the idea, but I'm just waiting to see the market digest and for tariff things to sort of develop, because Trump did say if it doesn't happen immediately, then he's going to apply 200% tariffs. So it could be tomorrow we might see some sort of development there. Gold, I closed out of gold for a decent profit yesterday. This morning actually. Pound CAD, I also really like pound CAD longs. Sorry guys, I'm not reading the chat at this. I'll go back through the chat. I'm just going through the watch list and then I'll go through what you guys are saying. Pound CAD, I really like the idea because we've got sticky inflation in the UK, and Canada is in the middle of a trade war at the minute. So we've got China that's put tariffs on Canada. We've got the US putting tariffs on Canada. Canada's putting tariffs back on the US. But I see it as all just a net negative for Canada. They can sort of try and defend themselves in terms of tariffs, but I just don't see them having any sort of success. It's more just a, you punched me hard, I'll punch you back sort of situation, rather than it being any type of win for them. So I will be looking to get in long on the next pullback, which ideally would be these previous highs, as previous market structure. So that's the plan, but whether we can get that much of a pullback, I don't know. But yeah, that's pretty much it. Actually, it's on my watch list. Okay, let me catch up on the chat, so see what I've missed here. Scotch and a fine Habano. Yeah, I do. Yeah, I do like a whiskey and a cigar. It's a nice way to end the week. I've actually got 2 cigars on my desk, so I might have one tomorrow. Can't do it today. Can't celebrate on a Thursday. That's a bit weird. What do you think about XAUEUR? I mean, I would assume bullish, but I don't trade that. I can have a look in a second though. Let me just go through the chat. Max is looking at Euro Swiss as well. Very nice. Glad we're in the same idea. Brandy. I think my grandma drinks brandy. Do you think inflation slowing in the US was false positive? Maybe next month we can see a revision higher due to tariffs. Maybe, but I say this quite a lot. But the problem is when you look at news like that, it might get revised, or this could happen, that could happen, unless it's clear. Like, it's clear that we're having a cooling labor market, or it's clear that we're having higher inflation. Unless it's something definite, not just it might get revised. You end up in a position where you've just got essentially a coin flip. So you're basically not trading, you're just gambling. So I try to avoid thinking like that. I just take the data. Okay, here's the past 6 months of data. Inflation's been cooling, or it's been stable, or it's been heating up. Whatever it is, I'll apply that. I'll say, okay, inflation's doing this. Central bank's likely to do that. Labor market's looking like this. So you apply that narrative. When you try and build a forecast on ifs and maybes, it becomes a little bit difficult. It can be done, of course. You still need to have a longer term forecast for the trade to develop, but hopefully you get what I'm trying to say. Are there any carry trades going on? Not just yet. I mean, unless you want to start trying to buy dollar yen, then not really, as far as I'm concerned. I think Swiss yen would be the next good one, but maybe not until second half of the year, even into 2026. But that carry trade is not going to pay very much. James, you think gold is set to make new all-time highs this week? Yes, I do expect it. The reason I closed gold was just to avoid a profit-taking move. What I didn't want to do was have pretty short-term trade. These weren't long-term positions. It wasn't like what Nixon, where he entered down here. I couldn't afford to hold up into this level and then get caught in a downside move like this, because that would have taken my trade out. And I don't trail stops. I'm happy to maybe move stops to break even in certain situations, which I probably would have done in this situation, but I'd rather realize the profit. If we do get a move like this, then I'll look to enter. If not, then I'll wait for the break, a retest, and continuation. So I'm happy to just book the short-term profits and wait to see what happens, but I don't see a reason gold can't go up and hit 3,000 in the short term. Canada is lonely. Yeah, it seems like Canada's been bullied a little bit actually at the moment. I feel quite sorry for them. Smoking's bad for you. Well, you don't smoke cigars, do you? Well, I guess technically you do, but it's okay. Sound like an Andrew Tate fan. Sorry, I didn't know that Andrew Tate set the trend for cigars. Hi James, could we see dollar retrace back to 105? Yeah, I mean that's pretty much what I'm looking at. I'm looking at 105.5 give or take, but that would line up really, if not perfectly, with this fib. So I think you've got the right idea. I would expect it, but whether it will happen is a different story. Don't see 3,000 before weekend. Yeah, I'm not sure we'll hit 3,000 before the weekend, but I think it's possible we'll get new all-time highs tomorrow or today. I mean, it doesn't have much further to go. And again, the narrative for gold is still very good in my opinion. Self-substination, no problem. See you soon. Have a good day. Forex James playing the next James Bond. If anyone can get me casting, I'll do it. I'll be the first Asian James Bond, I think. Yeah, I will. You don't allow smokers in a helicopter. Boo. Which FX pair would you be looking to trade dollar? Dollar yen short and euro dollar. Well, actually, I'd say pound dollar at the moment long. I'm too unsure about the euro. Whereas the pound is stable. I'd be quite happy to short-term buy pound, short-term buy pound, sell dollar. What's my indicator inputs? I use a RSI with a length of 6. This should be EMA. So RSI, length of 6, EMA, upper band 80, lower band 20. So this just gives more extreme points in the market than the default settings. The blue or dark blue EMA is 200, and this light blue one is a 50. Let's say if you want to make money, you would advertise all year, going up to 3K, then you get it up there and dump it for the bag holders. That's, yeah, pretty good idea. Defib, support, resistance, give profitable entries. Well, that's what I do. I use fibs, mixed with support and resistance. Anything can make money, in theory. I mean, I was saying it in my Discord yesterday, I think, but the way I view the markets, you've got two approaches, really. You've either got a very, very simple approach, which will be easily defined. So, for example, you've got, the fib, you've got an RSI down here, you've got some moving averages, and some levels in the market. It's very, very simple. It's straightforward. Anyone can understand it and anyone can learn it. And the reason that type of thing works is because it's so simple. It's so obvious. You've got so many people looking at the same thing. And obviously, if you're using something that's super weird, super complex, it's likely you're going to have less people seeing it, less buying and selling off the same thing you're looking at. Then you've got the second approach, which is using inefficiencies in the markets, which is what quant traders do. I don't know why I'm drawing on the chart really, but it just helps me think. But inefficiencies are very difficult. I would say actually almost impossible for retail traders to do, because you need to be quick. I want to say quick, I mean, you need to be able to do it in milliseconds, and you need a very, very advanced knowledge of not just maths, but also the markets. And if you, let's say, for example, I had an algo that I implemented that was the same level as something like Jane Street. And I came on stream and I was like, look at my algo. This is how it works. It would be arbitraged out within a day and it would be unprofitable. So that's why, it's not ideal for retail anyway to have super complex strategies. I think the general rule I have is the simpler the better. Sorry guys, I'm just catching up on the chat. I think I'm a little bit behind. How can smoking be good? Smoking isn't good for you, but on the other side, I love nicotine. It gets those synapse firing on full blast. So you get some nicotine, you get a Red Bull, a black coffee. Trust me, your output will be like you've never seen before. Keep your brain stimulated, keep your work high, you'll be good. What do you think about pound New Zealand risk off sentiment pressuring Kiwi? Yeah, I think pound New Zealand will be a long, in my view. As you said, risk off sentiment, pressure in the New Zealand. We've also got not super bad data for New Zealand. It's not the worst thing ever, but it's not something I would really be interested in going long on just yet. And as I said earlier, we've got sticky inflation in the UK, which is dampening rate cut narratives by the Bank of England. And the UK data, again, it's not awful, which is surprising. So I wouldn't mind going long really on the next pullback. So I would say if we can get a pullback to the 200 moving average, that would line up really nicely here. Well, actually not perfectly, but it would be good enough, really, I would say here. So I would look to go long on, I'd look to go long here, stop loss below these previous highs. Take profit probably just up here. That'll give you a nice 1 to 2. Keep it simple, straightforward. Hi, James. Can you explain why AUD is so weak in longer term AUD CAD? And I see Aussie having more upside potential. Well, you've got China that is a big driver of the Australian economy. Excuse me. So when we've got weak China data, we often see weaker Australian dollar. We've got iron ore that's taken a big hit. Iron ore is a big driver of the Australian economy as well. So it's just not got a great outlook, to be quite honest with you. And the Canada, again, as I was saying earlier, it's stuck in a trade war, and it's a pretty nasty trade war as well. Going back and forth with the US, they've got China as well that's put tariffs on them. So I just don't see Canada as much of an option in terms of going long right now. And oil, I completely forgot to mention oil. Oil's taken a huge hit, so that's a big weight on the Canadian dollar as well. Do you prefer low win rate, high R&R? No, I prefer to go for a 1-to-1 or a 1-to-2 and have a relatively high win rate. I'm not someone that can I couldn't sit and hold a 1 to 10 trade with a 20% win rate, for example. It's not how I'm wired. I like to find an idea, get in, get out, and that's it. Simple as that. The side of James' head's looking smooth. Thanks. I use moisturizer. Got to take care of your skin. Coconut water is good as well. RSI with EMAs is faster. I'm not sure what you mean by that, Shadow. James is an addict. I am an addict. I think everyone has vices. My vice is a bit of nicotine, a little bit of caffeine, and then I will outwork everyone that I can. And then I'll go to bed, and I'll wake up, and I'll do it all over again. Fallout and Basher are like built are like Valium. What does that mean? EMA faster than SMA? No, Kaidos. EMA and SMA are just calculated slightly differently. I'll be honest, I've got no idea what the exact calculation is. They're both a moving average. They both do the same thing, but an SMA is a smooth moving average, and EMA is an exponential. I'll be perfectly clear. You probably have to Google that. This is what I mean when I say I'm sort of a brown bread trader. I'm very bland. I know what I need to know, and that's about it. So, if it goes beyond that, like options or the calculations of a moving average, don't come to me for that. How do you find your trade ideas? I will start with this magical, and honestly, it's going to blow your mind, this magical thing called the Edge Finder. Use code ELITE for a discount. I will find something. So let's just say pound dollar. I want to go long pound dollar anyway, but I need to find a pullback. So I already know the current economics are bullish. So this is where you can do two things, or this is where I would do two things. Either use this as a short-term idea because it's the current economics. Like I said, it's the current data in the market or current data in the economies. So that's fine to take, an intraday trade or a very short-term swing trade. But if you wanted to then apply that to a longer-term trade, if you wanted to hold a swing trade for a week, 2 weeks, 3 weeks, I would then go and look at bank reports. I'd go and look at the economies in a very zoomed in way. And I'd say, okay, well, it looks like X has happened, so this might happen next. This is the likely move, or this is what the central bank's expected to do next. If they're holding, the hiking, the cutting. So I use Edge Finder as a scanner. Then I go and zoom in a little bit on something that interests me, which is why I normally give you quite a, what do you call it, like a base case on a lot of markets you guys ask for, is because I don't look into everything. I don't. For example, the I don't know, let's just say New Zealand dollar. I don't really have much on the New Zealand dollar because I've got no trades that interest me involved in that. So I can give you sort of the general outlook, but nothing too in depth. Basically, James is saying he can do what I do. That's a great compliment. What have I said here? Nicotine and caffeine stimulate focus. Exactly. BGP, yeah, you know the method. What do you do if Edge Finder scores on Edge Finder change while you're in a trade? Well, that's what I mean, BGP. If I'm in a trade and the Edge Finder if the Edge Finder swaps, so let's say I'm in pound dollar and it switches down to neutral or even negative, then that's up to me to then do my own research and say, okay, well, the current data swapped, but that switch from bullish to bearish could have just been it could have just been the trend. It could have been seasonality. It could have been retail position. It could have been COT. And I don't put much weight on those things. I more look at the economy, the core of the economy. So inflation, central banks, services, manufacturing, labor markets. So, you've then got to do your own due diligence of what's actually changed. Is it just a little bit of sentiment? Is it just a seasonality? Or is it the core driver of the trade idea that's changed? What type of trader am I? I'm an intraday and swing trader. I focus typically on G10 currencies. Euro pound. We can have a look at euro pound. I'm short here. So I would say on the back of the tariff news we had today, it's possible we'll see lower prices, but yeah, I'm going to say I am bearish on euro pound, but mainly because of the historical price action. What am I doing here? Yeah, okay. So I point this out quite a lot especially on this stream actually, but euro pound is very, very mean reverting and it drifts to the downside. So it's normal for us to have these periods where we have very aggressive upside, but normally and generally we have a very, very strong downside followed after. So that's why I'm quite happy to go short. mainly because of just the behavior of the market. It's mean reverting, it drifts to the downside, no problem. The euro also had a very aggressive move, which I would expect needs to be corrected. The daily looked quite bearish as well here. So yeah, I'm quite happy to stay in these shorts. How do you align technicals with EF readings? Sometimes you miss trades. Oh, I miss trades all the time. It's very, very normal for me to come on the stream and I'll look at a chart that I looked the previous day or the previous week. I'm like, oh, I should have taken it. I missed it. But it's very, very similar to what Nick does. I don't know if you know the way Nick trades, but it's almost the same. So I will look. Again, we've got euro dollar reading bullish on the edge finder. So I want to already start looking to go long. So here you can see bullish. The problem is we've got price pretty extended. So the only option for me is to wait for a pullback. So then I use the fib. So I look for a 50% pullback or a 618 pullback into one of the moving averages. I'll look for the RSI to be oversold. I'll just look for different confirmations that the market might reverse and follow the macro trend or the macro idea. And that's it. Very, very simple. Like I said, simplicity really is the key, I think, in trading when it comes to technicals anyway. James, Discord 299, one away from 300. Yeah, if we get one more person to join the Discord, it's free for 7 days. Pushes up to that 300 number. That would be nice. I appreciate it. I'm brand new to trading. I've been looking into BTC and Doge. I'm trying to learn Forex, but I find it confusing. Do you have any tips or advice? Puddy, forget everything you know about crypto. To trade Forex, and some people might disagree with me on this, but this is just the way I view it. To trade Forex and be successful over the long term, you're going to have to know economics. I don't mean necessarily super complex things. I just mean understand how inflation influences a central bank policy, understand how unemployment affects the economy, what that means for the economy, what does NFP show us, just these types of things. That's all labor market data. And then once you understand that, then you can basically just throw support, resistance, waves, whatever you want to trade on the chart and wait for an entry. That's very, it's very, very simplified, of course, but I don't have much time to try and explain all the complexities and details. But I would start on Nick's channel and obviously my own channel and just watch sort of what we're looking at. Look at the approach, look at the data we account for, and you will learn a lot. There's still times when I come on Nick's stream or watch one of Nick's videos and I'm like, oh, I didn't know that, or I didn't think about that. So even if you think you understand something, it does absolutely no harm to refresh yourself or to watch it again or whatever. Anyway, why don't you create daily or weekly watch lists so you don't forget things? I do, but I'm quite, at the minute, this is a good example actually. There's times where I have a completely flat portfolio, and then there's times where I'm really busy. So right now, I've got quite a lot of trades on, so I'm not really looking to place anything else. I don't care about missing anything because my exposure is quite high already. So I've got, no problem. But normally, so let's say I've only got 2 trades on and I'm waiting for any of these to work out, I'll set an alert. But quite often when I miss a trade, it's because I've done it on stream. So I'll be looking at something with someone, I'll say, oh, this looks okay. I'll add to the watch list. Now I forget to set the alert, I forget to write it down, or I'll just sort of generally forget that the trade's there. A1 should do appreciation day and just give James every award this year. Well, I appreciate that. Thank you very much. I don't need appreciation day. You guys are more than enough. I've got to say, actually, it's very, very nice. I think I've been doing these segments for, I don't know how long, maybe 6 months, maybe a little bit longer. And it's very rare that someone is negative towards me, which is, it's obviously very nice. Okay, what's my channel? XQOW. Oh yeah, Nick's, A1 guys put it in the chat. Pound dollar. Pound dollar, yeah, looking to go long. I've already covered pound dollar, so I won't do it again in much. But Edge Finder's reading bullish. Seasonality, I'm going to be honest. Seasonality for G10 currencies, as far as I'm concerned, is pretty meaningless. Obviously, it's a factor you can account for, but it's not something I would really base a trade around. So yeah, looking to go long. I'd really be focusing on a 50% pullback. I think that's very reasonable. Then yeah, I'll look to take a long position off here. Stop loss just below this blue moving average, which is a 200, and then I'll be. I suppose I've got two options really, especially with euro dollar, pound dollar specifically. Is we could either aim to trade this market back up to where the September highs was when we first saw euro dollar start to sell off, or we could sort of just trade in and out and see if we do get this. But I think that's a nice idea, is to try and trade back into September highs. But again, will we get that? I don't know. We'll see. Markets will do what they want to do, especially with Trump in office. You never know. You know what? Ball out. I could do a discount. We were running an 80% discount, but we also had a higher price. So it cost $49, but you didn't get a free trial with that one. So maybe for next stream, I could set something up for you guys if the $100 price tag is too much, but it would only be like a one-time use for the stream because I don't want to do discounts. Good to see you again. I've taken 10 losses back to back. Godfrey, that sounds painful. I'll be honest. 10 losses back to back sounds very unlikely as well. So maybe at that point you should go and do some optimizing of the strategy. 10 losses back to back. Keep it up. That's not very traders support traders of you. Ball out. SL hunts. No, they haven't, Godfrey. SL hunts don't exist, my friend. Please don't blame that. I'm going to hope that was a sarcastic comment. Okay. James, you want me to lie? I don't know how to. Wait. Oh, right. Okay. No, yeah, I get it. I find it very difficult as well, to be honest. SL Hunt, yeah. Anyway. Yeah, I'll be honest, guys. I've got nothing else to talk about. So if there's anything you want me to cover specifically, let me know. But I've gone through the watch list. I've gone through my open positions. We've had a quick look at the Edge Finder. But if there is any markets, I'm happy to cover. We were looking at Tesla as well, actually, on my stream. And I'll be honest, I'm a little bit tempted to take it into a long. I mean, this weekly time frame looks great. We've just come into the 200 moving average. We've got an oversold RSI. So the idea would really be to stack up some positions rather than just go in for, typical stop loss take profit trade. It would be a case of potentially go long here, go long here, go long here, and just sort of dollar cost average into Tesla. But as I always say, I don't ever touch stocks. I've got no idea really what's going on with Tesla, other than the only thing I actually know is that they're having a bit of a PR crisis. But that's about the extent of my knowledge. Ames, combining your strategy with EF, does it mean you would wait for GU pullback 50-60%? And if that pullback doesn't happen, you wouldn't take the trade? That's exactly the way it is, yes. Why USD strong after weak PPI? Well, we also had very good unemployment data. And we have just filled in the gap from the election back in November. So I wouldn't really say this is, well, I wouldn't say this is due to PPI. I'd say this is sort of just the market reacting firstly off the unemployment, but also after filling a market gap, and it's reached quite a nice previous level. So, you know, we've also got to take into account the dollar's had a pretty aggressive downside recently. So it's not a huge shock if we do see a pullback and then potential continued downside. We've also, it seems like we're priced in for more rate cuts by the Fed so far. So I wouldn't be too shocked that low inflation isn't a huge deal at the moment. Tesla, Forex, James. What do you mean? Did I say Tesla wrong? Is there a wrong way to pronounce it? Or have I just made myself look like an idiot? PR crisis is an understatement. Yeah, I saw a video this morning of the London sales shops. What do you call the place that sells cars? I forgot what they're called. Warehouses, whatever they're called, been having paint thrown on them and things. So I think definitely some issues there. I've seen people trying to sell Teslas aggressively as well recently. But as they say, where everyone's fearful, you should be greedy. Although I would hate to be Trump at the not Trump. I'd hate to be Elon at the moment, dealing with shareholders and having to do damage control. Although he's not actually doing any damage control, I think he's actually just making it worse. Car dealership, that's the word I was looking for. James holding the stream down to still 290 watching. Is there? I can't see the viewers on here on like the stream dashboard thing, but that's nice. I always wonder how many people are actually watching. 290 is a pretty solid number. Still a new trader, so I wouldn't be surprised. I need to fill gaps. Okay. 600 across all platforms. That's crazy. Wow, basically famous. Tom and Jerry. Tom and Jerry is a good way to put it, yeah. Is it possible Tesla comes so hated it just does go out? It's hard to come back when you're known as a Nazi. Oh, I probably shouldn't have said that word on stream, actually. I don't know. I think it will be fine in the long term. I think the thing is with Tesla is, and again, I don't touch stocks. I don't look into them. I really don't know. But from what I understand, there is no one, at least in the West, that's doing what Tesla does, or at least does it well. So I would say there is a high potential Tesla will come back, but due to the current PR crisis they're in, I think it might take a little bit of time. You could even take the full 4 years of Trump's term, and then when Elon's no longer a face of, a part of the White House, maybe then. But again, I really don't know. I'm sort of just throwing stuff at the wall, seeing what sticks. James gonna get cancelled. I won't get cancelled, but the stream might get a strike or something. I don't know. I don't know how strict YouTube is, actually. I've said quite a lot of words on stream, and it doesn't seem to have had any effect. For people who want to learn money in a nutshell, search Scrooge McDuck explains money. Scrooge McDuck always gives me that image of diving into the pit of, or the swimming pool of money. I might do that when I move to Indonesia. I might drain the pool and just fill it full of coins and dive in and break every bone in my body. Okay. So yeah, rough idea for Tesla, but again, I'm gonna have to I might have to get Nick to send me a screenshot of the stock box for Tesla. But yeah, I've got really no idea. Gold's still moving higher, it looks like. Let's just have a look. Yeah, still moving higher. So my plan for gold is two things. I'm still bullish. I don't see a reason I wouldn't be. So it's either a case of it drops back down into the range or even possibly lower into support or previous low. I don't really care which one. I'd quite happily buy both. or it breaks retests and then continues into around 3,000. I'll be looking to buy it either situation. It's just a case of waiting now. Excuse me. What's about the video data collected? Carly said, I've got no idea. I know that Trump did a didn't he do like a sales pitch or something? It was leaked that he had a note card full of all the car prices and things. I know there's some backlash on that. I saw some clips of the US news outlets sort of bashing him as well. I've also noticed, I'm sorry, a bit of word vomit here. I've also noticed a lot of, or from what I've seen, a lot of the US news outlets don't call him President Trump. They'll just refer to him as Trump, which I don't know is like a sign of disrespect or if it's normal over there. I've got no idea, but I would have assumed they would call him President Trump. Gold might continue to drop because of decreased inflation in the US. Well, lower inflation, increased likelihood of rate cuts. No, I wouldn't say so, to be honest. I think, if anything, it's more of a bullish sign for gold. Okay. I'm really annoyed about silver. I'm still not over this. So for anyone that wasn't here, I had an entry planned right here because this was the old 50% level. Right here. So I was talking about this. I put it in that Discord. I think I'd spoke about it on stream or in my Sunday video, and I was asleep for this this entry, so very annoyed, but nothing I can do. So just waiting for the next downside so I can go long on silver. Okay, Swiss yen's pulling back a little bit. Australian dollar, New Zealand's not doing anything. Australian dollar's pulling back slightly. Euro pound doing what it does. Dollar yen's pulling back. So again, this was called live on my segment here yesterday. So if anyone caught this, you're more than welcome. If you really want, you can go to my YouTube and subscribe. That would be the payment, the payment I will charge for this trade. Oil's coming down as well, so I can pay off the stop loss here, which is nice. Well, ideally. James follows me. I officially made it. Well, I've only got like 1,500 followers on Twitter, so not Twitter famous yet. James, talk about head, shoulders, knees, and toes pattern Ivan FX loves to use. I've got no idea. Let's just see. Where's the? I know there's a tool, isn't there, to draw heads and toe? No, head and shoulders. I'm not sure where it is though. Here? No, here. No, here. Oh, head and shoulders there. That's not head and shoulders, is it? Anyway, so I don't trade head and shoulders. It's not my thing. Can't really give you much insight there. Can I see your analysis on euro yen? Yep. Euro yen, I would still expect downside. The only reason I've avoided euro yen is just because of the recent euro strength. So you can see, actually, I've already got some really professional analysis drawn up. So this daily, I don't know if this was yesterday or I don't know when I did this, but it must have been quite recent. But I was looking at this 200 moving average on the daily, previous resistance again on the daily. So would make sense. Again, I am long-term bullish on the yen. Euro, I wouldn't, well, I'm definitely not bearish on the euro just at this moment, but I think for a long-term trade, I think there's definitely some merit to it. Head and toes. Maxi boy, hello. It's good to see you. Hi, James. Do you see a quick scalp sell-off for gold all-time highs? I'm not a scalper, but I'll do my best to give you something here. Already, I'm going to say no. Just because I don't really see. The only thing here is previous highs, which could give you a small downside move, but you're going to have to really sell into quite a strong candle if you want to go in now. I'm gonna be honest, I can't really justify going short. I don't have a scalping system, so there isn't really much of an outlook I could give you. I've also just realized I'm still halfway off the camera. I'm sorry. I'm not very professional at this thing yet, even though I've been doing it for quite a few months now. What is Nick doing in the background? No idea. Hey, James, do you think EA with the same exact strat and criteria similar to the person could be profitable? No. Well, no, to be honest. Well, actually, maybe is what I'll say. Because it's very, very difficult to code a strategy. And you might say, oh, my strategy is rule-based. You think it's rule-based until you try and code it, and you see it's just a failing strategy because it relies on intuition and discretion. Or you can use a very, very strict rule-based system, and that might work. But most of the time, it's either or. You can't have, well, you can, but it's very difficult to build a profitable rule-based system that doesn't rely on discretion or intuition. So, for example, my strategy is very simple. I could very, very easily code it into an algorithm or an EA, but the problem is my strategy requires economic context. So I can't just enter on every 50% pullback I see because they're everywhere. So I have to pair it with what am I expecting from each economy, if that makes sense. So there is that sort of discretion in there, or intuition, or whatever. James, how about doing monthly view on how GBP USD is going to $2? Is GBP USD going to $2? How far away is $2? Actually, let's have a look. Yeah, I mean, yeah, maybe. I'll be honest, I can't really think of a situation that would happen. I mean, anything's possible. How do you start learning fundamentals? I learned from a family friend, but the reason why is because before I learned what actually moves markets, I was obviously just technical trader. And the problem is I wasn't really seeing much. I'd have a few wins here, a few losses there, but I wasn't profitable by any means. So I wanted to see okay, there's a trend, I get it, but why is that trend there? What's causing the market to go to sell off for 2 weeks straight? Why is that happening? Why did COVID actually move markets? So it's sort of just looking into all those types of things and putting pieces together. For example, why did 2008 crash happen? Why did people? Why would your parents have struggled because banks lost money? On the surface, it sounds pretty straightforward, but when you actually look into it, you learn things, and you'll learn about how economies work and how all these cogs fit together, and sort of take it from there. Hi, James. Do you have a video explaining Fibonacci strategy? I do, somewhere. You're going to have to scroll through. I can't remember what the video is called, but I do have a video on there somewhere. I think the thumbnail is white with a picture of a chart, and it's got like a quote on the thumbnail saying, I can't believe it works, or something like that. I think that's the right video. Anyway, guys, Chris Pulver will be here to take over the show very shortly, within the next couple of minutes. So if there's any final things, feel free to ask. You can pick up a few books and learn fundamentals if you don't know economics. That is also true. Why are you so great? I'm not. I'm just a normal guy. I appreciate it though. James, can I get a quick 1 min signal, please? My account's in drawdown. Okay. Here. Okay, sell pound dollar here. Take profit here. Max lot, max risk, full margin, stop loss here. Go for a 1-to-1 risky full account. You should be all right. We'll see. There you go. Now close the trade. Close it quick. There you go. You just made what, like 20% of your account? Simple stuff. Easy money. This is why I'm Forex James. Obviously, you know, I just want to clarify that was a joke. I know there's some people might have taken that seriously. Question: what's the reason for recent JPY bulls? JPY bulls because the Bank of Japan's on a path to normalization. So what they've done is they were in negative interest rates. They've now come out of negative interest rates. Their current interest rate is at 0.5. It's expected that they're going to slowly hike rates. So I think there's one, actually it might be two now. I think 1 or 2 rate hikes priced in for this year or expected for this year. So what that does, you know, it makes people want to buy. So essentially the central bank divergence there between other banks. If you look at the ECB, actually the ECB is not the best example right now, but if you look at the Federal Reserve or the Swiss National Bank, well, yeah, but generally there's quite a lot of divergence there. Most central banks are either holding or cutting, whereas the Bank of Japan is actually the only one hiking at the moment. Oh, wait, did I say long? Actually, I meant short, but there you go, whatever. Talking too quick. That's why I don't trade the 1 minute. You know, it's too quick. It's too many things going on. Yeah, it will be done shortly. I'm just waiting for Chris to arrive, and then I'll leave you guys with him. I'm ready for some food. Hungry. So ball out, closed the stream, and then came back because he thought I was done. I appreciate it. Chris is late. No, Chris isn't late. Chris is meant to come on in a minute and a half. So we'll see. It's funny you mentioned Alex. I put a story up about him the other day, yesterday. You know what's surprising? Actually, I got a bit of hate on that story. I mean, I was a little bit mean about him. It was probably, yeah, it was maybe a little bit too mean, but yeah, some people are like, oh, you don't have losses. I was like, it's about the context. It's not about the having a loss. It's like, why would he ever? Okay, yeah. You know, I'm going to spend my last minute here having a little bit of a rant about Alex. I probably shouldn't do it. It's a little bit unprofessional, but I have to. So I actually follow him quite closely because I find him fascinating. But his current narrative is #road to 10%. And what makes me wonder is he did this $100 to $1 million challenge, and he you know, it was easy by the looks of it. There's no problem, blah blah, whatever. Why is he struggling to make 10%? And why is he going long on the dollar when it's very clearly dropping off a cliff and we'll have pretty poor US conditions, very likely that they're going into recession? It just shows a very severe lack of knowledge. And you would expect someone that earns millions trading to understand just basic dynamics. So it really annoyed me, to be honest. So I called him out yesterday. Obviously, he pays no attention. He doesn't know who I am, but anyway. Not gonna lie, missed Alan's segment today. Yeah, I like Alan. Alan's segments are really good, actually. I like his background. I don't know if he's still here, but trade idea: buy Alex signals and do the opposite. You know what? I've been thinking about doing a video like that when I move. It's trying to live off signals for a week in Indonesia because everything's cheap there. I could do it $100. If it blows, it blows. But I think that'd be quite interesting to do. See if these influencers can live up to their claims. Yeah, these trades just aren't moving. Pretty boring markets actually at the moment. Sweet. Okay. Hey James, which book should I follow to study economics? Mark, I'll be honest, I don't think I've read. What I would suggest though is go to this website. So this is completely free. It's called Course Sidekick. Just go to this link. By the way, like I said, it's free. I've got no affiliation, but it is a very, very good resource to use. Course Sidekick, Economics, Study Guides, Alamo Macroeconomics. And it takes you through pretty much everything that you would need. It's very, very long, so you might not want to read all of it, but take out key parts and just bookmark it, and then you can reference it whenever you're a bit confused. So I always keep that bookmarked for people ask that exact question. Okay. You just told me something valuable. Going to read them through. Thank you. Yeah, no problem, Mark. That's what I'm here for. Baby Pips. Baby Pips is also a great. I forget Baby Pips exists actually, but it is a very good resource to use. I would say most traders should start on Baby Pips, then advance to more of the advanced resources. I think Nick's also got some. I think I don't quote me on this. I don't really know, but I'm fairly sure this video Nick's made about economics. I don't know if it's on the A1 website or if it's on his YouTube. I'm not sure how you would actually find it, but Nick's good at breaking things down. I've been on the charts for some time and watch what news affects what side as well. I definitely have to look up macroeconomics much better. Mark, well done, because it's very intimidating. It's a very difficult thing to sort of get into because there's so many things that, when I was learning it, I was like, there's words here I don't even know what they mean. I've never heard of these words before. They don't look like English. But once you start getting some sort of a basic understanding, it all sorts of slots into place eventually. Nick taught me many things. Yeah, Nick's great for learning things. Yeah, there's nothing to do in the markets at the moment for me, anyway. It's more a case of just waiting for these pullbacks. Can't get into any more yen pairs. I'll be overexposed. Dollar Swiss, I like the idea, but I can't justify it where the dollar is at the moment. The DAX, no interest. Euro Swiss. Oh, actually, I missed my entry on Euro Swiss, but that's okay. I was talking about this at the start of the stream, if anyone remembers. So I might take this one when I get off stream. Yeah, something I like this. Stop loss underneath the fib. I might have to go quite tight just to make it worthwhile. 1 to 2. Yeah, I might take this. I don't have an interest in the DAX because there's too much uncertainty around. I'm not sure what's going on with the tariffs yet. You know, we had some news today. I just want to see if it's going to get worse. There's also some pushback on the fiscal stimulus by Germany. I think the Green Party pushed back a little bit, so I'm just a bit cautious. Anyway, guys, Chris Pulver is here to take over the show, so I will see you all later. I appreciate you all being here as always and being such a nice audience to talk to. Guys, don't get margin called. I think I'll see you tomorrow. If not, I'll see you next week.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Thursday. Welcome back. I am taking a look at a potential play for SPX this morning. Just close out a quick winner this morning on SPX, debating on how I want to set up the rest of the day. Either we are going to continue to trade choppy inside of this low from, I think, Tuesday or Monday. This low is Tuesday. So either low from Tuesday around 55.30 that holds. I mean, I think the upside, if we have oversold conditions, which I do see a lot of that, if the Tuesday low holds and it holds again today, then there's a pretty good sign that we're at least defending this area. The issue is if we don't defend this low, things get bad. Like that's more pain ahead. That's more, more lows, more fresh lows. I will be looking for some potential divergence. So if I take a look here, everything's fallen off pretty quickly. Typically, we do see with a direct slide like this, the market tends to respond with some type of pullback to get back into a center price. So anyway, long story short, I mean, we are sitting at oversold conditions on the relative strength index. I don't have a crossover or anything on MACD for the daily, but it doesn't mean that immediately we just have to pop right up. I mean, the nice thing is at least the pain has ceased for right now, but I'm trying to see if it's going to be pausing here for a pullback. Yesterday was pretty straightforward. You just grab a Fibonacci swing from this high to this low, and you look to see, just some simple retracement levels. I think that's where the market can pull back to. I don't know. We're going to find out, So anyway, hopefully there's some near-term relief and just a little bit of a pullback. Doesn't have to be anything major, but going back maybe 3, 4, 5%. To pull back into some previous support becoming resistance. I still think this market has another potential flush lower. It would just be hopefully easier to see a pullback first and then another position to possibly take it lower as opposed to just more, more unwinding. So if we get SPX going to fresh lows, that's over 10% corrections. If we get the NASDAQ going to fresh lows, that's going to be closer to like 15+% corrections. So, we don't know. But if we make some fresh lows, I will be watching to see, is there divergence on relative strength? Is there divergence here with the MACD histogram? But it's still going to feel like garbage if you've got some pain to the downside, right? So oversold on S&P, oversold on SPY, futures as well. Qs oversold on RSI. Again, this doesn't mean a bottom, but at least we have stalled here for the last 3 days of trading. I think the lows are key to watch. Okay. Lows are key. So I'm doing some pruning right now in the portfolio. I don't mind this trade. I'm actually just going to, I'm going to move this down. So I'm going to put in a broken wing butterfly. I did this morning. This trade is, all right, I'm going to put in this trade for a 50-cent credit and just let this hang out for the day. So it may not get filled. If price is going to defend this low or not even be at the low, it looks a lot better if we get above 56.40. We get above 56.40 and take out this high, then we are creeping back into last week's low as well as this gap. But, I'm trying to make sure like if price is going to fall, I've got a little bit of buffer, and I would also have a broken wing butterfly set up where it'd be a profit trap. So this would be the credit. I'm trying to pull in 50 cents. Then I have a profit trap, and then I take on my risk. So it looks something like that. So I do have risk on the trade, but probability profit would be pretty high. Either walk away with a probability of 50 cents, or if price is going to be threatening that level, potentially a profit trap at the end of the day. But I hope the market just wants to go up. Hope's not a strategy, but as far as what we've been dealing with and how I've been positioning, a little stability is hopefully very helpful. Now, in the meantime, I am taking some profits today. I closed out Airbnb for profit. Adobe is looking good for profit on Friday. Intel, I had a good call on Intel yesterday afternoon. I'm not in full profit mode, but we had a big announcement on Intel. There was a new CEO announced. So let's see here. Boosting shares nearly 10% pre-market, closing at, it surged from $20.68 to now up to 24 and change. So really excited about new CEO. I did take a trade yesterday in my YouTube session in the afternoon at like 3 p.m. So it's up right now. I mean, my max profit on the trade, I'll show you right here. Max profit on the trade is $18.50. Which if I do a debit of $15.50, so it's $3 is net profit times. So $600 is my max profit. And that would be if I wait all the way till April 25th, which right now isn't bad. Isn't bad at all. I could roll this out since we have an immediate push right away. If we go just on the call side, if I roll this out, I mean, I'm not that interested for rolling it out a week, paying fees, and getting 3 cents credit. That's not really going to do it. If I want to roll it out by a month, so roll it out to the May 16 expiration, an extra 35 to 38. I mean, 35 cents isn't terrible. It's an extra $70 on the trade. Still get it called away at 23.50, hopefully. Actually, this isn't even bad. Let me see. Could I go? If I rolled it down to 23, I get 87 cents. I would be getting an extra like 30 cents of profit plus increasing the probability of it getting called away. That's not bad. It'd be an extra $60. If I roll it here, I go up from a 23.50 to a 24, and I still get 40 to 45 cents on the trade. That's another, I'm trying to think, 40 cents plus another 50 cents. I get about 90 cents more than $180 of profit. Out to May, but I don't really want to wait an extra, I don't know. It's not a bad trade. It's a good problem to have. I mean, I'm debating on, do I want to take $358 now, or do I want to wait 43 days to get the extra, $300? So I don't really have to do anything on it right now other than just kind of think about it. So I guess I'll continue to do that at least for today. I'll think about it. I closed out Airbnb for winter this morning. I'm just going through the portfolio and watching closely. These are ratio spreads out into April. Okay. So this one I'll be watching closely. So April and May. All right, keep a close eye on Amex. Alibaba got a bunch of profit on this one. I'm just going to let this one. These are all out of the money. These are fine. BCS, this is a Barclays. I took some cash secured puts, 12 and 10, had about 90% of max profit, and I'm still over a year away or just under a year away. So I'm just taking the profit. So I did, and I also freed up some buying power. Baidu still hanging on this one with a collar trade and some out of the money credit spreads. Berkshire Hathaway, this one's looking good for full profit coming into next week's expiration. BTI, I took some of my cash secured puts. This is like British Tobacco. BTI is a decent dividend stock. It's up. And the other ones are out to January 2026. I'm going to let those run. Those are up about 50% max profit. The other ones were up about 80% max profit. And I'm just going to take the profit rather than waiting 100 days. So I closed out this one, also freed up some buying power. CB, this one's looking good for a play into, I mean, I'm up 80% of the max profit on this one already. Do I want to wait 64 days? Sure. Let me take a quick peek at this one. CB. This is the insurance side. I mean, that's a big response. So yeah, this one's fine. I'm not worried about this one being a problem. I'll let that one just go full profit. CEF, that is silver and gold. CENX. It's like it's so far out of the money, but it still trades for like a higher debit than I want it to. I'm only up about 66% of max profit, and it's way out of the money. So I will just let that one, I don't know, expire, I guess. CMG Chipotle, no threats on this one. I have a ratio spread. Take a quick peek here. So that trade pulled in 45 cents. It's trading for about 86 to 87% max profit, but looking good for full profit coming in next Friday. That one's going to be fine for next week. Coin. This one I'm going to watch. This is out to the end of the month. So I still have next Friday and the Friday after that. If price can get back above 195, then I avoid assignment. I don't mind the assignment. My break even would be around 180, 189 anyway, if I took assignment. So I think this is an easy enough one to repair, especially if there's any type of rally off these lows. I mean, I think Bitcoin would rally a little bit if the broad market picks up as well. So I'll keep an eye on that one. Costco looking good for some profit. These are buy a put. What is this trade here? I'm just trying to decipher this one. Either a buy. What did I do? Either I did. Okay, I know what I did here. This is a 1-1-1 trade, but it's all fudged up because my 655 has 3 puts in it. So what I actually have here is a 6. So I bought a 660. Change the color. So I bought a 660 put. So that's a +1. And then I sold a 655 put. So that's a -1. And then I also sold a 600 put, which is a -1. So somewhere in there, I need to decipher what this trade actually is. So basically it's this. If price is greater than 660, I'm keeping credit on the trade. So let me try to figure out what that credit is. So there's a debit, there's a credit, there's a credit. And for 862 on this one, so -4.72 plus 8.62. Okay, there's no way this trade's trading for $15.50 credit. There's no way. All right, I'll figure it out. I'm not going to stumble through it, but I do have to figure out how exactly I structure this one, and I'll find it in my tracker. All right, that one's fine. Dell, this one's out to May. This one's okay for right now. That is a bull put spread. Oops. Diamonds, if we are staying above 405, if we're staying above 390, watching those areas closely. DocuSign has earnings today after market. I've got an earnings play in there. I'll keep an eye on that one. EWJ for Japan, Brazil. FCX for copper. FEZ, that's my Eurostox 50 play. FXY for Japanese yen, up a little bit. GLD up, just waiting. Gold still up on the day. Google, I closed out a ratio spread yesterday for profit, and now I've got expirations out into May as my next one. Google at 150. We're trading at 164. Should be okay. Bitcoin related, still up about 4 grand. We'll see if Bitcoin makes a run with the market. Up 340 bucks max profit there. I'll kick around the Intel, see if I can make it better. Maybe it's worth rolling. Maybe. Russell, 190 line in the sand for next week. This actually looks pretty good. I hope we don't go too much lower. There is a potential profit trap here on my Russell trade. So right now, I'm actually up more profit in this trade. This actually might be worth taking off. So if you can see on my chart here, it's $1. So $1 is what I pulled in on the trade, and right now it's trading for 132% of profit. So that means I should be able to close this one out for a small profit trap. And if I do it now, this goes out 2 weeks from here. But essentially, the max profit would be if I do nothing and we are trading around 200 bucks, then this one's just going to expire at $1 credit. If we're trading at 199 or 198 or 197 or 196 or 195, then I have a potential $5 bonus trap on top of that, which is why right now this is showing a slight bigger profit. So for the sake of buying power, I mean, I could, be greedy and think like, okay, good, I hope this comes back down to 190. I really don't. At this point, like the Russell's dropped 20%. I hope the Russell goes up. At these levels, it'd be nice to see that this past resistance becomes support and the market offers at least a near-term relief. You take a look at the Russell here. We've actually been oversold for a while. I mean, this one started to hit oversold conditions right after this giant February drop. Right. So in any regard, I'm looking for this trade to offer up some divergence. Okay. So point is, if the Russell's going to pull back at all, it's probably better for me just to take the bonus profit right now. So I think I'm going to. So I'm going to take this trade off. This one should be closing. So I got in for a credit. It should be closing for a credit. That's the nice thing is I can get that little bonus trap. Yeah, I've got 30 cents credit on this one. Let me see if I can get out of this trade for another 30 cents credit. So 30 cents credit not filling. Let's try 30 on the nose for the mid price. No. 29. Bid price is 25. I'm trying to get just a few cents over that bid price. 29 cents credit. Okay, cool. Anything here on Russell? Yeah, same thing. So this one, same thing. 1, 2, 3. Close this down for a little bonus profit of 28 cents. 28 cents. So I'm going to take the bonus profit there on IWM for this March 31st. Closing 28 cents credit. Yes. Okay. Very good. This one is just own shares. This one, no Russell exposure. This one, here's the 111 for a bonus profit. 1, 2, 3. Fill the 28. Good. Okay, so that's another winner. IWM. So that was $1. So $1.01 credit, and I closed it out for 28 cents. So that gives me a total of $1.29 per contract. Nice little bonus winner there. I'll take it. This one for IWM. 1, 2, 3. Good. Okay, the one out to May, I'm not that worried about. I'll keep a closer eye on that one, but expiration-wise, there's no trap. I'll just watch. Any other exposure here? No. 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 Okay, that should be it on IWM. Good. Okay, Okay, so we're good there. JD, I needed to stay. It's back up to $42. This one likely gets called away for profit at $40. I could continue to roll it if I wanted to grab the extra income. I've got 500 shares. It's worth it to me. Like anytime I'm at like, 200 shares, 500 shares, 1,000 shares, any little roll, even if it's for like 20, 30 cents, does help. So, staying up above 42 is looking good. This means is China getting another bump to the upside. HSI is still hanging in there. Let's go to Alibaba. Alibaba's hanging in there. CQQQ, Baidu. Baidu's making a nice little run. I've got ownership of Baidu in the mid 80s, and it's covered at 100 and 105. I don't really want it to get called away because I think Baidu could be also running to visit the September highs, which is up into 116. Obviously, a 116 profit target is a lot more exciting than a 105. But if it gets called away, it gets called away. But the nice thing is at least turning upside. FXI hanging in there towards those September highs. KWeb probably has a little bit higher to go. If we have any pullbacks, I wouldn't mind adding some exposure here. MCHI, JD up to 41. This one's been crazy volatile. It's up to 46 and change. I think I just need to stay above $40. I might not get too cute with it. So my break even on this one is around $35. 35.42 is my break even. If I get it called away at 40, 68.70. So if I roll it one more time, maybe I increase that up to $7,000 in profit. But like I said, I don't want to get too cute with it just in case. I would say on the high side, if this goes up into $47 to $48, that's fine. If I was uncovered, I would be wanting to take profit in that level anyway. Okay, Schwab dividend, possibly a good bounce opportunity here. Schwab growth, I wouldn't touch this one right now. It's just pulling back. I will say this though, if Schwab growth falls down to a yearly moving average, this is an ETF. It's a Schwab instrument, but if this thing came down to like the low 20s, I would buy and hold this thing for years to come. Especially, these highs at $30 or $29. If this thing came down to like $21, you get $8 a share just on sheer, percentage growth. That move, 38%. I'd gladly put in, I don't know, $5 grand, 10 grand, 20 grand, something like that allocation. I think that upside is pretty decent. So not yet, but I'm going to wait. Previous resistance back here, right? Previous resistance here. See if it comes down to the low 20s, and that's probably the next spot that I dollar cost average. I do have shares of it already. So if this is a correction and it does make fresh highs, okay, fine. I don't get the entry that I want. Okay, heat map today. We'll take a look. Costco has dropped to the 200 moving average. Okay, one thing that looks pretty enticing about Costco would be when it's done, and I don't know where this level is. I honestly don't. This is why I kept saying I don't really want to be a stock picker this year, because if this momentum is going to get nasty, look, Costco looks good at this 200 moving average until it doesn't. Because if this goes flush, dead cat bounce, and then more to come, okay, and how does this happen? If the consumer is looking worse, okay, if consumption will be scaling back, if recession fears are growing, I don't care. This has been a fantastic run at Costco. This thing is way overpriced and way overvalued. I would not mind to pull back into like the 800 zone or lower, but I was kind of hoping that once they get over $1,000, they'd be looking at a split. But I don't see it. And until they do, I'm not that interested in allocating 100 shares at a stock that's $900. So I picked my options pretty carefully. I've got some plays down here into the 600s. I put on some call condors and bear call spreads and bear put spreads. That's been fine for the recent month. But it's, I don't know, maybe not a bad spot to dollar cost average, but I would not love it. If I put in a small allocation and they do like a 10-for-1 split, there's a chance that if I at least bought 10 shares of this, and I'd throw over $1,000 or so. I mean, that wouldn't be too bad if they do a 10-for-1 split, and all of a sudden I have 100 shares. Now I control options. So it's enticing. Correction-wise, Costco is off the highs by about 16%. So I don't know. I'm going to see if it falls a little bit more, or I'll consider maybe adding something. Okay, Walmart added some collar trades yesterday. We're bouncing off the 200 moving average, so I did protect my my put. Now I have a new collar that's a 100 by 65, and my break even's in the low 90s or like $87, $88. Nike still have $65 and $60 puts. Let me check on those really quickly, actually. Johnson & Johnson, this one's up about 54%. Coca-Cola, I might look at a roll on this one. This is out to April, but I might consider rolling it a little bit further since it's, I'm $4.65 in the money on this trade for my covered call. So if I can roll it, get another, maybe 30 cents, 40 cents, 50 cents out of it, it might be worth it. If I can roll it out in time and up in strike price as well to add to my bottom line. Let me take a look at this. So if I go quick roll, if I go out, let's say from 35 to 64 days, I have a feeling this is not really going to roll up that much. So I can keep the same strike price. I mean, it's not a bad trade. I roll it out an extra month, I get 70 cents credit. That's worth it. That's worth it. I don't have a ton of shares of this one. Could I roll it up? This one, it might be worth it. If I rolled it up in strike, and then how far out in time do I have to go? Probably further than I want, to be honest. August 15th. Let me take a look at the chart real quick. KO. I mean, we could backfill this. We could fill this gap in. I think I need to keep it around 65, to be honest. So if I roll it out to August, keep the strike the same, I get $1.70 at this. This is worth it. I'll just roll it out farther. Coca-Cola, I think, is pretty defensive. I don't see us going dramatically lower. So choices. I mean, if we came down to the low 60, I don't really want to just sit here and sell a bunch of premium on Coca-Cola. But it still offers a 3% dividend. It is super low beta. So even if the market overall is falling, like Coca-Cola is probably not going to do too much from a troubling drawdown. It will be relatively calm. So I'm comfortable going out to August, keeping the strike the same. Grab $1.70 out of this one. It's not bad. Just more time. I go from a 35-day expiration out to 155 days. So I add time to it, but that time to me is worth an extra. I mean, I have how many shares of Coca-Cola? So Coca-Cola, 1, 2, 3, 4, 5, 600 shares. Oops, 600 shares. I mean, it's an extra $1,000 if I'm waiting. It's okay. Can I wait 100 days to make $1,000? Sure. So I think I'm gonna roll it. So Coca-Cola. I'm gonna roll it. So I'm just gonna take the 65 call, roll it out to August 15th, keep the strike at 65, and grab $1. See if I can get $1.70. Minimum should be about $1.60, but I'm just gonna penny it down until it gets filled. $1.69, $1.68. $1.67 got filled. Okay, good. So $1.67 is my new roll. Okay, Coca-Cola. There we go. Rolling out to August 15th. And that's still a $65 sell call for $1.67 credit. So that will lower 63.07 minus $1.67 puts my break even at 61.40. Okay, so that's not too bad. Get it called away at 65 on 600 shares. I make 21.60 on Coca-Cola. So, all right, I will roll this one out. So 65, quick roll to August, and $1.67 was the fill. Filled no problem. This one here, 65, quick roll, strike the same, out to August, $1.67. Coca-Cola. Okay, working through it. No exposure on that account. No exposure on that account. And this one, 65, roll. Okay. No exposure. No exposure. No exposure. And Coca-Cola here. No exposure. That one got closed out already. Okay, good. That's an easy fix. Las Vegas Sands, fine. Microsoft closed out. This one's looking pretty good for next Friday. So $2.40 credit, trading currently at $140 profit. So 58.3% max profit. I'm going to let this one go. This is next Friday. If Microsoft stays above 370, I pull in $2.40 credit. There is a potential profit trap income as well. If I can show this trade here, doesn't really show up the way I want to. Let me see if I can zoom in. It gives you a little bit of an idea. A little bit of an idea what this thing is doing. So right now, this is current price on Microsoft. Okay, this area here. So anything from current price or higher is going to be worth $2.40. If price falls a little bit lower, I then get into a $5 profit trap before I take on any risk. So potentially, if we drop a little bit lower, I don't really want it to do this, but if it did drop a little bit lower, I have instead of a 240 winner, I could have $7.40 would be my max, which is still pretty good. Obviously, that's a big increase from what I think is a high probability into a bonus profit, but that would also entail probably the market sliding a little bit lower if that's the case. So summary is this. I'm not going to do anything because we're trading at 382. My line in the sand is 370. My profit trap is between 380 and 375. So I will watch that one. On April, I'm not really worried about that expiration, but this one I'm watching very closely. Okay, MSTR, still mostly watching the collar positions here. Yep. This one is going to be full profit. So that was $1.90. It's trade. I mean, I could close this one down pretty much right now. So $1.90. See if it closes for like 1 cent debit, 2 cents debit. If it does, great. It doesn't. It does. All right, that was easy. Take a look at MicroStrategy on some of these. MSTR 111. Okay, so this trade, yeah, I'm going to close this one down for 1 cent. So $1.90 credit, close it down for a 1 cent debit. Take that profit. Awesome. The good thing is that shows liquidity in this as well. I mean, oftentimes a 1 cent debit, that's trading some pretty liquid instruments, which I'm happy considering it's super volatile. But this also frees up some buying power too. So this is a collar trade. This is a collar. This is a collar. And then I have a bull call spread. So this trade is my 111. Taking majority of the profit right now. Not credit. I want a 1 cent debit. Filled. And that also should get me some buying power. That's a bull call spread. This one's bull call spread. Bull call spread. Just has some shares. This one should have the 111, 111 there. Okay. Closing this one down for 1 cent debit. Okay, that's closed out. No exposure there. No exposure there. Just the bull call spread. Okay, that is some MSTR. Keep going. Micron. This one's out to April. It's a ratio spread. NASDAQ, watching this one for a March 31st. This one should be good for at least $1.10. Potentially, I've got a, hey now. This one actually might be looking pretty good. A $25 profit trap, which could give me, this could be pretty interesting. This could be a $1.10 income trade with a $2,500 profit trap. Now, we're almost there. So right now you can see it's still, there's a lot of volatility in the option prices, but by the time this thing settles in 18 days, right now this trade is up around $1,000. So what I might end up doing, and I don't know if this is going to mess up my buying power too much, but this debit was only, this is what's crazy. This is only $1.50. This was $1.50 out of the money bear put spread that is right now trading for over $1,000 profit. So let me make sure that math is right. 85 by 83.50. Yeah, I mean, this was a $1.50 debit for a $25 max profit, and right now it's showing about $1,000. Let me see what this is trading for right now. $1.50 trading for $11. Let me see if I can get a $11.50 out of this one. That's a nice little winner. That's a huge profit trap. It does reduce buying power a little bit, but I'll take the $1,000. Still keep the probability that I have a 50 wide credit spread that goes out. I mean, 19.3 would be another. Let me check the option chain here. 19.3 is that's not super awesome. That's not super awesome. We could potentially be. Oh man, are you kidding me, dude? This market's saying that the NDX could move potentially 1,800 points. Oof. All right. Yowza. I guess, man, 19. Maybe this isn't as good as I thought. Well, 19.3. So it's pretty much like stay here. This is out a couple weeks. If the market stabilizes, like I said, most important thing is we stabilize off these lows, and then this trade is okay. So I'm just going to hang in there for right now. Let this trade work out. There is some risk on the trade. Got to be willing to take that and accept it. But otherwise, I want to keep that $25 max profit, because if I do end up taking a sting on this one, it makes the trade more manageable. So I guess I'll not manage the profit trap early. If this was way further out of the money and it looked like the probability of profit at that 19,300 by 19,250 was high, then I wouldn't touch it. But right now, the probability of profit's around 55%. It's not really what I like for a an out of the money credit spread. I don't want to see a 55% take profit or probability profit. I'd like to see a 75, 80%. So I'll keep that one running. Netflix, this one is a butterfly spread. It's a broken wing butterfly, actually, out into April. Otherwise, this one is going to be a 1-1-1 looking for profit next week. This should be a 1-1-1-1 there. So this trade I pulled in 278 and is trading for about 98% of profit. I can go ahead and close this one down. See what this is trading for. 15, 16 cents debit. 99.5% chance if I don't do anything, this can be a winner for next week. Unlikely Netflix is going to drop to $700 by next week. I don't think there's earnings at all. Yeah, it's way down here. So this trade was taken originally when we had this first decline. We had this decline. I added this trade. So 256. Max profit 278 and is trading for 265. But it's showing, let me see if I can get out for a cheaper debit. 1, 2, 3, 4. So 278. So it'd still be 260 and change if I close it out for 15 cents. See if this will fill. Nah. 278, close it out at 258 if I go 20 cents. Close it out at 15 cents. That's not bad. All right, taking a winner on Netflix. So 278 credit. Close it down for a 15-cent debit. Nice winner there. Netflix. 1-1-1-1. 15-cent debit. Come on. What the heck, man? Whatever, dude. All right, I don't really need to do anything in this trade, but it's just one that I want to manage. So this was 252. So right now, I mean, this is showing if I wanted the profit that I see on my tracker right now, I should be able to close this out for like 10-cent debit. And it's not filling, so I'm just gonna let this one go till next week. Okay. Yeah, let me just give me a few minutes. Okay. Someone's asking about FX position. Sure, just give me a few minutes. Nike, this one's fine. This is totally fine. I can let this one expire for profit next week. Nike's looking good for a profit next week. That was on the initial news, like Nike sucks and the stock market killed it and then it bounced back. So there's some resiliency. Odds of this one being a profit next week pretty high, 85 and 95% probability of profit. There's still a lot more time decay. I'm only up like 36% of my max profit. So I will just wait until next Friday. NVIDIA trading up to 117. That's fine. Own shares, got the collar trade, have some ratio spreads, but April's the next expiration there. Oracle, this one's out to May. This one's okay. Pfizer, Palantir, these are looking good. These will be fine. No pressing expirations though. PSP, that is for private equity. NASDAQ, this trade is looking okay. Right now, $1.55 is my potential profit. Right now it's trading for about 120 bucks. And it also has a bit of a profit trap on top of that. So this is not next Friday, but the Friday. This is the end of the month. So this is Monday the 31st. Let me check the option chain here on the 31st. Yeah, that's a 111. I mean, probability of profit in this one remains pretty darn high. That's a 15 delta. We're sitting at around a 87% chance of profit on that trade. That's good. I'll keep an eye on that one. Everything else is into April and May. Equal weighted. I'm just going to dollar cost average into that. RSP's equal weighted. Schwab dividend, Schwab growth. SkyWest. Airline stocks just getting bashed. Plenty of time in this trade, though. Not really worried about it. There could be an assignment here early on, but my expiration is out to October. Has anyone seen airline stocks recently? So SkyWest, a lot of this was, plane crashes certainly don't help. Terrible news doesn't help. Tariffs don't help. High gas. I mean, gas prices right now are lower. So that's not really an excuse to see the airline stocks go down. But SkyWest has dropped 41%. This thing has been a monster since 2022. Between the COVID lows in 2022, I mean, this thing has gone up a ridiculous amount. Like the best performing airline stock ever in the world. Like 770% is insane. But we have pulled back 40% in a heartbeat. Delta, same thing. Look at Delta, just falling off a freaking cliff. This is pulled back 37%. Now, all I'm looking at is I don't think this is something I want to try to catch. Right? I mean, maybe there's a trend line there. Maybe this thing's overextended, but I would rather wait and see, like, can it fall back? Can it fall back? Can it fall back into any of these levels? Because I would gladly position for longer term delta there. I mean, I could be wrong. Like this might stop the bleeding and start to go back up, but I'm not trying to catch a falling knife. It's like if it's in a bargain area, then I'll take a trade. But AAL, same thing here. American Airlines just getting smoked. This one, fortunately, was already in profit. I don't have any exposure outside of these. So this is $8 puts on AAL, and we're trading at 10.85. So I mean, $8 puts are way the heck down here. I don't necessarily think we're coming to fresh lows. I hope that we're not. So I don't really have to do much on these trades, but that's kind of it that I have for exposure outside of SkyWest. And then LUV, not as bad, but still kind of can't get off the ground. I mean, I would just watch chart alarms down here in the low 20s. JetBlue just can't get off the ground. No pun intended, but yeah, I mean, I'd like to see this one. We just had the merger, like Spirit Airlines and JetBlue just kept. The merger was getting all excited, and then all of a sudden the market gets excited and prices it in, and then it just fails. So we're just hanging out around this like $4 to $6 zone, which kind of sucks. And then UAL, United Airlines, one of the best rips we saw in 2024. This one was all by itself up around 200%, and it has pulled back so quickly. 40% pullback. Not touching this thing. I mean, I think if we come back into these levels again, sure. I'll revisit this whole notion of like buying airlines cheap. Till then, don't care. All right. That gets me to silver, still looking good. SMH, this one's out to May. This one's fine. SPX, watching those key levels. SPY, watching key levels. AT&T, got a bunch of profit on this one as well. Showing 101% of max profit. Now, what did I do in this one? Sell a put. I bought a call. Is this thing uncovered? Yeah, I'm up 120% of that call option. Okay, I might take some profit at AT&T. Maybe. I'll come back to this one. I mean, it's good. Up $1,700. Who doesn't love some profit? The rest of them, I mean, we're trading at 26. This is a leap. This one is a leap. This one is a leap. This one is a credit spread. Nope, these are puts. Sorry. So these are all puts. I just sold a bunch of puts on AT&T, and they're looking great. These in particular, up 92% of max profit, 87% of max profit. I can sit here and wait another 100 days for it, or I can just take the profit and maybe close out this call, and that would give me a nice little chunk. That'd be 289. So we're up 289 plus 890 plus 310. It's $1,489. Also, because they're puts, I get some buying power back. So what's my max profit here? 71 cents, $1.94. So 265 on those. So 265, and it's trading for 25 cents. Take the profit. 265. I'll take 230. Let's go above the mid price just by a little bit. All right, screw it. I'm not going to get a bad position. Now in this trade, $22 call, I paid $236 for it. And right now it should be trading for probably $5, almost $6, almost $6. Thought it said 100 and something percent. So 520. 520 minus 2 what? $520 minus 236. Minus 236. Okay, that's right. Yeah, 120%. That's fine. Do I take the profit on AT&T? Where are we trading at? Yeah, I'm going to take some profit there. On a call option, at least the puts and stuff all look fine, but on a call option, I'm just going to take it. Taking the profit. So 520. See if we get a generous fill here. Of course not. Oh my gosh. You can only instruments of 520. Fine. Close at 520. So AT&T, call, close at 520. I love how it closes me at 521. Close at 520. Taking a winner there. All right. Almost done. And then we'll get some top-down analysis going here. AT&T. Closing that call out for a nice little winner. So that was a 2. $230 debit for a 520 credit. Nice little winner there. Anybody else have some AT&T? This one just has shares. Fine. Okay. Almost through the list. The puts look fine. I might still massage the cash secured puts that I have out to June for some profit. TKO looking fine for April. That's a ratio spread. TLT pulled back a little bit. Still going to manage this one up $1,100. Tesla trading at 236. This one got to keep a close eye on. So if Tesla's not above 255 next week, I'm going to take an assignment of Tesla. I don't mind it. I don't love it, but I can repair it. So this might be something I need to track closely next week. Yeah, I'll be watching. Hopefully we see a rally. I honestly like this one to get out of trouble and not have to take the assignment and then give myself a little bit more time on it. But 255, 250, and 255 out for the next 8 to 35 days. Those were intended to be some income trades on Tesla. UNG. This one is up some profit, but still going to watch natural gas. Uranium, pretty gross, but fine. It's just range. XLC. This one expires next week. Should be, I mean, it's trading for 93% profit right now. Could this trade? I think I'll take profit here. I'm up 93% of max profit. There is a little profit trap in here for an extra buck, but not trying to be super greedy. Max profit's $110. This 55 cents credit, what's it trading for right now? 4 cents debit. If I get out of here for 5 cents debit, it's a sector, not closing. Maybe this one's better if I just let it marinate over the weekend. I'll manage this one next week. Okay, I'm gonna put that one on the radar. XLC for a 1-1-1 trade. XLE. This one expires at the end of the month, 83, 82, 81. High volatility on that one, but should be looking at about $1.43 of income. We'll see what price does. And then XSP is coming into end of month, watching some key levels on XSP. All right, that gets me through A to Z. Appreciate everyone patience with me, just kind of walking through that, closing out some trades and managing positions. I did free up some buying power. I pulled back about 60 to 70K in buying power, which isn't too bad. And now let's talk quickly top down. So we're still choppy for the day. We haven't taken out the lows yet. My broken wing is still not filled. I don't think, at least. Took some quick profit this morning on SPX. Nope, still trading for 12 cents when I'm looking at a fill for 50. Son of a biscuit. Yesterday I had 2 nice trades here for $1.10. I was trying to get a little generous fill this morning. It's just not there yet, and it may not fill. That's fine. So we're red on the day, but not taking out Tuesday's lows. That's really going to be what's kind of critical for this week, is not taking out these lows, right? Not taking out these lows, or if we poke the lows, we get back above them. You know, I can see the market manipulating a little bit. So for futures traded out there, I mean, you're accustomed to that stuff, right? Where the market comes in, tests lows, you know, test these levels. That could be like little liquidity sweep, and then all of a sudden we pop back. Doesn't happen as much in stocks and indexes, but the market can clearly play some games. I think the key here is that we don't close lower. Okay, especially going into this Friday, tomorrow, to end the week, we don't really want to see price closing lower. Okay, so if we get a little relief rally, that is good. I am wondering if this is a little tiny bullish pattern. Maybe it is, but you know, the market's clearly figuring it out. But if it takes out the low, we've got some more pain ahead. But taking out the low, if it pulls back, that would be that little bit of divergence, maybe like a little bear trap. So just because the percentages and the corrections, the technicals look pretty decent. I still wonder how bad the sentiment is, which should have printed today or prints end of day. I mean, look at this. So 226 was the 1-year bearish high on sentiment. Right now, this is crazy. This is crazy. Like how consistent and how bearish this market actually is. This typically is a contrarian indicator. So this to me is showing if there's like record amounts of put buying, you don't see that crowd rewarded very often. So we are getting some bearish extremes here, but yet we're not seeing price. You know, price is not going the other way, right? Like price is stalling at these lows, not necessarily going back up. So I'm curious if we have that bit of a sentiment swing where things kind of ease a little bit, or this is just a nice contrarian signal where everyone's bearish and the market just decides to go back up. So anyway, we'll see. But this is some pretty wild stuff. If you take a look at the fear and greed index right now, again, the contrarian to me, extreme fear. I mean, Buffett's famous saying, buy when others are fearful, sell when others are greedy. When I'm seeing extreme fear, it's difficult to time. It may not be perfect, but at least in the near term, I think we could have some, some dips. Okay. We've got extreme fear in market momentum. We've got extreme fear in stock price strength. We have extreme fear in price breadth. We have extreme fear in the put option. So put call options. So puts extremes, like they're not crazy back to like where we saw it August, like August 5th when the market bottomed out. Everyone was just buying crazy amounts of put just in case, and ended up being like one of the strongest bottoms of the year. Back here in April, same thing. We had a 5% sell-off in the S&P, 6% in the NASDAQ. Everyone's buying puts at the bottom. So we're not quite up to those extreme highs, but man, I would not be surprised to see with record-breaking like put volume that extreme fear is going to be kind of the opposite trade. Market volatility, fear-based, safe haven, extreme fear, junk bond demand, extreme greed. That's interesting. Junk bonds, high yield versus investment grade. But okay, we're finally starting to see some pretty big shifts. And when everyone's crowded out on one side, I tend to think that it's wise to position the other way. I know. I mean, it's not perfect. I mean, look, sentiment itself is not a signal, right? Sentiment is not a signal. So this is probably more of an anticipation trade than, I don't know if it's George Soros or Druckenmiller saying where it's like, I'd rather step into the game after the game has started than, walking into something too early. So it was some baseball analogy where it's like, before the game has started, I'd rather, play the game in the second inning or something like that. I don't know, whatever. I'm paraphrasing. Point is, at these lows, anticipating these lows, I don't know if this is the low. I kind of would think that it is. I mean, I spent weeks and weeks and weeks planning for this market to correct, hedging for this correction, and that was good. So a lot of good things did happen here as far as making some gains on the way down. However, the velocity in which it fell and how one-sided it was also changed a lot of option prices aggressively. So, for my ratio spreads and for my cash secured puts, I mean, those were out of the money plays that are now a lot closer to the money. Those deltas changed quite a bit, and those option prices traded quite a bit as well. So point is, if we are going to hold here, it would be kind of nice. So, I mean, and the wild thing is even going back to like 2022, I mean, I guess if you want to look at like how bad could it get? Well, we obviously in 2022 had a nasty flush. That was a 12% drop that then pulled back a decent amount, right? So could it be that? Sure. But I don't see this market dropping like 15 to 20% without having a pullback. Go back to, I mean, are we having a COVID crash right now? I don't think so. Are we having a Volmageddon event right now? Not really. We've had persistent VIX. Are we going back to a great financial crisis? I don't think so. And even that was not a straight flush, right? I mean, when this thing started to top over in 2007, it's still sell-offs. I mean, we went down around 5%, pulled back, right? When we had the nastier flushes, this went down around almost 9%, then pulled back. This was one of the worst flushes here. We go from this high to low. That's down about 16%. We still pulled back. So point is, I'm watching, and hopefully we have a little bit of a relief just in the near term. Otherwise, I'm going to be mad. What are the buy levels? I mean, probably low 200s. I mean, and Tesla it's got to be looked at as a long-term trade. Everyone knows it's volatile. Everybody knows Tesla's volatile. Okay. So, I mean, I don't mind this like, low 200s as a bite. And then the rest would be, if it came down into like the 50s and 60s again, I would buy. I'm not going to say I'm going to load up on Tesla, but I would buy it for the long term. So that's what I'm saying. Even though I don't want the assignment here, I do think the ability to repair the stock is very straightforward. So If I own the shares, it would be owning it around like $248 or so. And even like I don't know, even an in the money call could probably repair this thing for $500 to $1,000. You know, there's enough premium in this trade that I could protect some type of profit on it. So, but I also don't want like all these trades to be assigned either. You know, so I'm just watching carefully. But if it was low 200s or in like this gap here in like the 150s, I mean, that is a ridiculous fail on Tesla's stock price. If this thing comes all the way back here and pulls back 69%, holy crap. But that's what makes a market. Things are nuts. However, if we have a 50+% pullback, we fill some gaps along the way, you know, this would be an interesting spot to see if the market can stabilize this low and then work its way higher. So I think for me, the probably biggest threat that I have on Tesla is that my timing is off and I got too, I guess too aggressive on the time. If I'm out to April or May and we have any type of like seasonal rally, these are probably going to be good for income and I'll still have one assignment that I'm going to, repair. Okay. All right. Let's talk currencies for a second. So today we have JPY on top and dollar, pound. Swiss is dropping a little bit, which is good. All my Swiss pairs, I'm just kind of hanging on to those for right now. But not a ton of currency volatility on the vertical axis. But I still like the positions that I'm in. Let's go Aussie CAD. Let me check one thing. 1 p.m. Yes, I can. Okay, Aussie CAD fine. Aussie Swiss just hanging in there. I've been scaling in since these lows at 56. 56, I did get like one position at 55 and 54. I did get some zero positions in when this crash happened in 2024. And that's it. And then I'm still prepared to kind of buy it down to that level if needed, but it's just going to be patient, keep the trade sizes small. Most of my positions on Aussie Swiss, if we're back above this level, I've got a lot of profit above that level. So this profit target, holding out to be a little bit more greedy out to like 6,000. Those are big payout levels if I'm willing to show the patience. But look, this is a pretty easy trade. You have a low, you have a high, and this thing is just showing a channel like so, right? So we're going up, we're going down, we're going up, we're going down. I still look at this as if you dollar cost average into to Aussie Swiss, eventually this becomes a trade that is going to pay out hopefully pretty well. Got to be patient. This literally might be like a 3-year freaking experiment for me. Not experiment, more like a 3-year investment. But it could be very, very lucrative. But that's what I see on the technical side. Aussie New Zealand, flat, Aussie dollar, flat. I'm out of that trade already. New Zealand dollar, that's break even. Dollar CAD, still garbage. Dollar Swiss, if it pulls back lower, 86 or lower, I'm going to buy more. Dollar yen, I just don't love it. I'm trading FXY and I'm out of 6J, which is my Japanese yen futures, but just watching. Getting some levels lined up here, 5,500. Still have that SPX trade pending at 50 cents. That might end up getting filled today. We'll see. Still watching the lows for the week. Lows are on 55.27. Let's see what else. CAD Swiss. CAD Swiss bounced beautifully off the lows. I like that trade a lot, actually. Going back into these highs around 64. This is a double bottom play. We get back to the center highs. That's target 1. But the best move would be that you double this up and go here to target 2. Again, big opportunities. I'm still bullish on this thing towards like 7,100, but a lot of my profits are below this level here, below this level here. So if I get to like 66 or 67, that is a big winner. CAD yen, watching those lows carefully. Just be careful on the yen crosses. I say that all the time. I mean it. Euro Aussie finally started to show some signs of topping. Again, this was a ridiculous run for over 1,000 pips. And, you know, I just wasn't surprised we saw a little bit of an interim top, but I'm not trading it. You know, that's just jumping in front of a rocket ship. Same thing here. Like, I mean, it wasn't surprising that we had a pullback, but you got to be just watching that thing like, you know, 1 and 5 minute charts to catch a top on that. Euro Swiss, hopefully still pushing up towards my 98.80 profit target. Euro Pound is back up to the 200 moving average. We had a nice little pop on that one for some profit. Euro Yen, that was all Euro related, not JPY. Euro New Zealand, same thing like Euro Aussie and Euro CAD. Pound Aussie, let me go Euro Dollar actually. Euro Dollar, I don't know. It's in a spot like, I don't like this spot. If you were long above 106, you had a nice little squeeze. If you're looking to do anything here, this to me is just noise. I have no idea if this wants to go up to 112. I have no idea if it wants to pull back to 106. So I don't think this is a good spot to be doing anything. A pullback, however, a pullback that stays like supported in this 105, 106 zone, I think that looks good for a retest of the same high or possibly a run into, you know, 112 if the dollar is going to continue to get weaker. And as I said on the dollar index, if the dollar comes down to 101 or 100, there's still some room for the dollar to get weaker, which means euro could benefit from that as well. Okay, pound crosses. No top yet on pound Aussie. Just, again, I'm watching for some type of pullback because it's been just a mean run from 97 to, I mean, it's been a 900 pip move. Pound CAD, ridiculous. Over 1,000 pips. Pound Swiss, still bullish on this one. Pound New Zealand, I mean, I think a pullback is coming, but do not call the top here. Like, who the heck knows? So any type of topping pattern, okay, maybe a swing trade to correct, but I just wouldn't be fighting this stuff. You know, like there's something going on here where your euro is stable, pound is stable, your Asian related pairs, Aussie, New Zealand, commodity based pairs, they're not doing well. CAD is down, Aussie down, New Zealand down across the board. They're not doing well. So I would not fight that momentum. Euro or pound dollar, you know, pull back into like the 2,700 zone, maybe have a bounce. So if it pulls back in here, trend line, maybe there's more upside. But again, watch the dollar index. New Zealand CAD, still fine. I'm just leveling into this thing all day long. New Zealand Swiss, leveling this thing all day long. New Zealand Yen at the lows. This could be a pretty nice level. If we start holding this support, getting maybe on the right-hand side of this trend line or just kind of carving out a falling wedge here, this New Zealand Yen may end up being a really nice, you know, asymmetry, like high reward to risk trade. Maybe, but I want to see it kind of structurally play out that way. And that's it. So that's a quick run through currencies, a lot of stocks, comb through the portfolio. I'll wrap it up there. So we'll see if today holds the lows for the market. We still haven't broken this trend line, by the way. So as excited as I might be, like, I think we could have a pullback. Look, sentiment readings are really extreme. Like, we're extreme bearish, we're extreme greed or extreme fear. But the market doesn't really have the proof and price to go the other way yet. CPI data was improving today, this week, and PPI data was improving today, which is fine. There's nothing major tomorrow. We have the Fed next week on Wednesday. I'm curious if the Fed says or does anything that allows the market to go up. High dividend stock, MO. MO and BTI are my favorite dividend stocks right now. They're going up. They're defensives. They're things that people are always going to buy. It's in the dirty sector where it's like it's, you know, tobacco. That's, you know, I don't invest in ESG. I invest in what I think can make money. So MO is like a, you know, 6 to 7% dividend. BTI 6 to 7%. They're fairly low beta. They're non-correlated. So I do like those stocks. BTI, as in Bravo Tango India. Okay, have a good rest of the day. See you soon. Thanks. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.